market is really pushing the Fed right now and saying, how much longer is this rate hiking cycle going to last?
Anything that's sensitive to the economy is just being taken out of the woodshed and destroyed right now.
Take a deep breath and not be so negative on equities. We've priced in a lot of risks so far this year.
We do think that the economy will be able to withstand higher overall interest rates.
Right now, I think we can confidently say we're not currently in a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene. I'm Jonathan Ferro and TK. The focus not on the building behind us as we open up this program this morning. The focus on number 10 Downing Street.
Number 10 Downing Street with Lizzie Burden there and Anna Edwards there. It is a movable story. We're going to go to that. It will be with us through surveillance this morning, but a lot more going on in the economy, in inflation. Let's not forget this jobs report for America in 2 days.
Pushing forward to Payrolls Friday. Looking forward to catching up with Brian Deese, the National Economic Council Director here in Washington, D.C. But Tom, let's start with Boris Johnson and a bit of perspective. There is a mechanism to deal with these things. For the British public, they're staring down the barrel of another Conservative Prime Minister.
And he's fighting the mechanism right now. I was stunned by what Ben Wallace says. It's the first thing I thought about, folks. This is essentially the defense minister for the United Kingdom. How does Boris Johnson affect international policy, particularly the war in Ukraine, where he's provided real leadership under these circumstances?
With great difficulty, clearly. But as you mentioned, and it's an important point, he has been a tremendous ally for this administration.
Yes.
A tremendous ally for the Ukrainians as well. Tom, going from here, I don't think that's going to change for the British government. What we need to focus on is policy and how policy is going to change with a new Prime Minister, with a new Chancellor. And who that Chancellor is, I have no idea. And how that policy is different to what we've seen from Prime Minister Boris Johnson and Chancellor Sunak.
And we're advantaged with your perspective on this, John. The shock of Corbyn to Johnson, the linkage of those two together, is unprecedented.
I would agree with you, Tom, but at least we understood the Corbyn philosophy, the ideology. Do you understand what it was under Prime Minister Boris Johnson?
I think a lot of people are still
struggling with that. A lot of people are still struggling with that, Tom.
We're struggling with Sterling a little bit stronger here today. I mean, we're going to do the data check, and we've got lots to talk about, but within the milieu right now, the markets is all we have to grab onto.
Yeah, without a doubt. And Tom, if you speak to people in foreign exchange, and we've been doing that through the whole week so far, talking about the UK, they won't talk about the political situation, Tom. That doesn't come up. They talk about the Bank of England, Governor Bailey, and what's going to happen with central bank policy. And that brings in the euro too. I can't figure out whether central bank rate hikes, so the ECB or the Bank of England, are currency positive or currency negative. So you're in the foreign exchange market right now. What on earth do you do, Tom, whether it's the UK, Europe, or the United States for that matter?
How do you run a bond book? I mean, behind us here and on radio, the White House and the Washington Monument, behind us, Jefferson in the distance, they're not running a bond book, are they? But the bond book right now, the vol in bonds, I've never seen.
Let's be clear, I think some people might say the Federal Reserve has been running a bond book, Tom, for quite a while, and probably the biggest bond book on Wall Street. But Tom, you bring in the Fed. Yesterday for the Federal Reserve, those minutes confirmed what a lot of people were already thinking. This Federal Reserve determined to hike interest rates again this month, potentially by 50 or 75 basis points. They're going again.
Is it already dated? The minutes are X weeks old. Is it already old news, or they have to reform their narrative, their story, as they stagger to July 27th?
Think about the context for the minutes. It's really important. Yes, they're dated. They always are, just by definition. But there was this window of a couple of days right before that Fed meeting where they switched from 50 basis points to 75. And all the reports started to come out around that. And of course, the minutes were coloured by that shift. From here, what are we looking at now? Subtle signs of deceleration in this economy. Subtle signs of deceleration in this economy that this administration ultimately will have to deal with. Just subtle signs, but not big enough in the view of, say, Citi, Bank of America, to stop this Federal Reserve from hiking again.
Subtle signs, folks, is British for data dependency. They're staggering from data to data, and I'm sorry, claims today.
Sure.
It's not a presumed jump. I believe it's 220. That's a good number. That'll be something Jerome Powell can sit on. But the jobs report tomorrow is really, really important to that subtle detail you're talking about.
Would you define, though, labour market data as closing the barn door after the horse has bolted.
Yes,
Is
by
that
definition.
the barn door data? And
Yep.
if you think about it
Yep.
that way, Tom, if we're waiting for the labour market to break before this Federal Reserve pauses, then haven't we already committed to being too late and inflicting too much damage on this
That's the
economy?
arch central
Isn't that
bank
what this market's
discussion.
picking
This
up
is
on?
ex post ex ante, and the bottom line is these central banks plural. And imagine how Governor Bailey feels this morning with the nation essentially politically collapsing. The bottom line is they wait for the data. That's what they've always done, and they'll do that this
Well,
time.
the good news for Governor Bailey is the attention's not on him right now. The attention is firmly
Right.
elsewhere.
Should
Let's
we
talk
do a
about
data
some of
check?
that. We can do that right now with equity
Okay.
futures slightly positive on the S&P 500 through most of this morning. Talked a lot about a euro with a 101 handle on euro dollar. I am not used to where euro dollar is. We're back to 102. Yields look like this on a 10-year. They're climbing again by 3 or 4 basis points, 296.31. Here's another number maybe we've got to get used to, 99 on WTI, 99.33, up on a session by 0.8%. That's the price action. I believe we can get you a morning brief with Katie Lyons. Good morning, Kaylee.
Good morning from New York, John. There is a lot going on this morning in addition to those UK politics. Starting at 7:30 a.m. Eastern time, we get the account from the ECB's June meeting, essentially their equivalent of the minutes. How do they tee us up potentially for a 50 basis point hike in September? How are they thinking about fragmentation? All of this becoming more interesting because, as you pointed out, John, we have a euro hanging out around its weakest level since 2002. Then at 8:30 a.m. Eastern time, it's the data point that Tom was talking about and Dean Mackey over at 0.72 was talking about yesterday. Pay attention to initial jobless claims. 230,000 is the number economists are expecting, but of course that tees us up for the payrolls report tomorrow. And finally, we heard from the Fed in the form of minutes yesterday, but as Tom alluded to, those are a couple weeks old. So we'll get updated thoughts from the Fed's Christopher Waller and Jim Bullard later on at 1 p.m. Eastern time. They're actually speaking at two separate events. Waller will be participating in a NABE interview. Jim Bullard is speaking in Little Rock, Arkansas. But what do they say about the potential for a 75 basis point hike this month? What in the data are they looking at in particular? We'll be paying attention to those remarks, John.
Kelly Lyons, thank you. TK, just looking at the bond market, just briefly, 2s10s, negative 6 basis points now.
For Global Wall Street overnight, I would say greater curve inversion is interesting. And for the pros, each nuance here of curve inversion, each basis point matters. And the other thing that's given way ever so slightly, John, before we dive into to 10 Downing Street, the yen is slightly given way, weaker yen this morning.
Should we dive into 10 Downing Street?
Let's dive into I mean, we're looking for a statement noonish.
Something like that, according to Sky. Let's get the
noonish.
latest reporting for you. We can do that with Bloomberg's Anna Edwards at Abington Green and Lizzie Burden at number 10 Downing Street. And Lizzie, I want to come straight to you. The pressure building throughout the whole of yesterday. What's changed this morning?
Well, this morning there was a business as usual cabinet meeting that turned out to be not so, where the Chancellor Nadhim Zahawi, newly appointed, less than 48 hours in post, and his colleagues told the Prime Minister he needed to resign. And that seems to have been the turning point where Boris Johnson has decided that finally he's going to do the thing that we thought we didn't know when it could possibly come. He didn't seem a typical Boris Johnson thing to do, but now we're almost elbow to elbow in the press area on Downing Street. The crowds are gathering beyond the security gates at the end. There's no sign of a podium yet, but the speech is expected in the next couple of hours. There's also a report that Boris Johnson's been to see the Queen as a courtesy to tell her that he's planning to resign. And it's the culmination of the Pestminster scandal, the Partygate crisis and the cost of living crisis.
Anna Edwards, I was really taken aback by some of the comments by the people around Boris Johnson that it's over, maybe most likely Ben Wallace, who runs defense for the Prime Minister. Who is advising him now in these delicate moments before this statement? Who are the people in the room giving Boris Johnson counsel?
Well, a lot of people have been trying to give him counsel over recent days. John said that the pressure was building, and we saw those images yesterday of various members of his cabinet going to number 10 Downing Street to try and offer their wise words, to try and tell him that the game is up, the fight is over, but he wasn't listening. And some of the words I was struck by, the words of the Chancellor Nadhim Zahawi, as Lizzie says, just 48 hours in post, but he wrote his letter this morning saying that he publicly wants the Prime Minister to resign. He said he told him that in private yesterday, but the Prime Minister was not in the mood to listen to him. And that is someone he's been friends with for decades, somebody who he just recently promoted to that position of Chancellor, now coming out and saying the time was up. And so that really, as Lizzie says, was the final straw and one of the voices that maybe just cut through.
Anna Edwards, thank you, from Abington Green alongside Lizzie Burden on number 10 Downing Street. Team coverage continuing throughout this morning. Here from Washington, D.C. Tom, before we move on to D.C., can we just sit on what's been happening here? Just think about this. A newly minted Chancellor, and then he tweets this, 24 hours after he gets the new position under Prime Minister Boris Johnson. Just read this. Prime Minister, this is not sustainable, and it will only get worse for you, for the Conservative Party, and most importantly, for the whole of the country. You must do the right thing and go now. That's the Chancellor, right, Tom, of 24 hours ago?
And what's so important here is he speaks for a certain part of your Great Britain that is watching the follies of this, the foolishness of it. This is a guy who showed up, I don't remember where, Heathrow or on a boat, speaking no English in any number of years, was fluent, educated, started businesses from scratch, hugely successful. He's a self-made guy looking at a fancy guy who went to Oxford going down in chaos.
It will be super interesting as to whether he actually retains that post in a new government under a new Prime Minister.
Could he be Prime Minister?
I'm not sure about that. Let's see who's in the running, and
right,
we can catch up with the guys a little bit later. What I'm trying to understand, and what we were meant to get this morning, remember, is some kind of economic outlook from the Prime Minister and his new Chancellor. Of course, that's all changed. That's all changed. But will there be a shift, Tom, from Chancellor Sunak to Chancellor whoever it is under a new government?
Does this mean we get another season of The Crown? I think it says that.
How long do you have to wait for this season?
I don't know.
I'm not looking forward to that. That's the most American thing you've said this morning.
Thank you.
I'm not sure it gets more American than that.
It does.
From Washington, D.C. this morning, good morning to you all. With Tom Keene, I'm Jonathan Ferro, with futures up 0.2% on the S&P 500. A morning with full live coverage outside the White House. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boris Johnson is calling it quits. The British Prime Minister agreed to resign after an unprecedented wave of resignations from his government. Johnson plans to stay on as caretaker leader until October, but some lawmakers in his Conservative Party are questioning whether he should. Last month, Federal Reserve officials solidified their resolve to keep raising rates to prevent higher inflation from being entrenched. According to minutes from the policymakers' meeting, officials viewed maintaining the central bank's credibility to control rising prices as crucial. They saw the return of 2% inflation as critical to achieving maximum employment. FBI Director Christopher Wray is escalating a dispute between the U.S. and China over hacking. Wray warned Western companies that China aims to ransack their intellectual property so it can eventually dominate key industries. He told an event in London that Chinese spies are snooping on everything from Fortune 100 companies to startups. And the U.S. and its allies are exploring ways to limit Russian oil revenues without hurting their own economies. Bloomberg's learned they've discussed trying to cap the price between $40 and $60 a barrel. They would do that by banning insurance and transportation services needed to ship Russian oil unless it is purchased below an agreed price. And Bloomberg's learned that British Airways is close to a deal with one of the unions representing check-in employees. That could avert further disruption after the airline had to scrap thousands of flights due to a staff shortage. The union had said that check-in staff at London's Heathrow Airport would walk out during the peak vacation period. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This recessionary fear is overtaking the market and convincing us that there's going to be something cataclysmic that's going to happen. And we think that that's not going to play out, and that those kind of, that portion of the pullback, you get that money back, and the stock market's going to rise between now and the end of the year.
Jonathan Golliver there, the chief US equity strategist At Credit Suisse, live from Washington, D.C. this morning. Good morning to all. I'm Jonathan Ferro, together with Tom Keene. Jonathan, Gold, they're constructive on this equity market, looking for 4,300 year-end on the S&P 500. That forecast has come in, down from 49. Looking at equity futures right now, positive a little more than 0.1% on the S&P 500. A decent run of gains coming into Thursday. 3 straight days of gains on the S&P. We could make it 4. Yields just a little bit higher by a couple of basis points. 295, Tom, on a 10-year.
And a nuance here, John, is the big stocks are somewhat doing better than the NASDAQ. The Dow and the S&P actually giving me a better percentage change than you'd see in a normal market.
What do you make of the Golub optimism around earnings, Tom?
I think
to accept that we've got to slow down, but not to adjust your earnings outlook.
It's a recession bet, John, and this comes down to nominal GDP. Michael Darter was brilliant on this yesterday. You get the measurement of the real economy, doom and gloom out there right now, measurement of inflation, and how much of that inflation is productive for corporations.
Do you think we've had
get you there.
the recession trade, though? Do you think we actually have?
No.
When we look at the bond market, maybe you can make the case, I don't know. But when you look at the equity market and the earnings outlook, Tom, can you actually make the case that that's what we've seen?
No, I don't know. I think, again, we have to wait to get those first earnings. We'll see them from the banks, setting us up for it. But as people have said, the guidance is absolutely critical, the forward guidance.
July 14th, JP Morgan,
is that,
next week.
I did not know that. I mean, it's a fun.
July 13th, CPI too. Big week next week.
You're on top of it. Am I on vacation that week?
You are with us, I believe. Bramo's back too.
We'll see. Bram will be back from Halls. Right now, a very important conversation. Yes, we're continuing to follow the United Kingdom, but we must stay on this stock market. Anthony Dwyer is Chief Market Strategist at Canaccord Genuity, and he's been absolutely brilliant about having the courage to be in the market. He writes of a summer rally. What kind of rally will it be, Tony Dwyer, and how do I have the courage to place new money in this time of fear?
Well, it's funny, Tom. As you know, this year I've called it a tumultuous year, and I've been on the sidelines except for those nimble enough to dip their toe. And the issue is that you have a pretty severe restriction in money availability, not just from the Fed, but from the market, from home equity lines, all the things that kind of generate spending. So the macro backdrop really remains pretty tumultuous and not that great. That said, there's 3 conditions, Tom and John, that we look forward to at a bottom. And again, I think you have to differentiate a bottom versus the bottom. And that's an oversold enough condition. We've got that for sure. Enough pessimism. Number 2, you need the idea that the Fed, people believe that the Fed may be discounted and near the end of their tightening. That's been evident with the drop in rates and commodities. And lastly, you got to have this belief that we could have a soft landing.
I look, Tony, at the soft landing and all the talk of economics. It's going to pivot off of Jobs Day. Does a statement of the labor economy mean anything to an equity strategist now, or are you already looking beyond tomorrow?
So I think you have to look beyond tomorrow because they're highly revised numbers. Now, guys, we've been doing this for multiple cycles. We're all old enough to have been through multiple cycles together. And typically, I'm the guy that's out there saying you want to buy the dip and money availability is good. But as you know, that's not been true. This year, we've stayed on the sidelines because when you look at real liquidity, which is readily available money versus what's being used for economic output, you had a historic rise coming out of the pandemic. I mean, every recession that we get comes from a unique reason, whether it's the S&L crisis, .com 9/11, great financial crisis, or pandemic, always a unique reason. The solution to the recession is always the same: throw as much money at it as you can through lower interest rates. And the only thing, Tom, to answer your question directly that can allow us to look through the coming slowdown in economic activity and earnings, to me, is when the Fed signals a major change. Since I've been doing this since 1987, and I can't remember a major correction in the market where the bottom didn't come with a signaling change from the Fed.
Tony, you've got to work out what's going to stimulate that change. What will be the catalyst for that? What's the number? And I know that might sound a little juvenile. Maybe that doesn't come from the S&P 500. I know, Tony, typically you would look to credit. Credit spreads have been wider through the 2018 wides, and yet still this Federal Reserve will not pivot. So, Tony, where is that tipping point? Where is that pivot point for you?
Well, it'll come, John, I think with lower economic activity, which isn't necessarily tomorrow. The Fed has been very clear. After the May meeting, Kashkari said that they've withdrawn accommodation based on a mortgage rate movement. They've withdrawn accommodation faster than they gave it in 2020. think about that statement in terms of the trillions of dollars. And then last week, Powell says that the risk of not having stable prices is greater than the risk of recession. Now, the idea that we're going to go back to a Volcker era where you invert the curve intentionally and shut down the economy to curtail inflation. During Volcker, you had a generational low in debt to GDP, generational low. Today, we have a generational high. So I think that the risk that I think they've already likely gone too far, given what's taken place in housing and some of the interest-sensitive areas. And that to me is really going to be over the course of the rest of the year. We're going to find some pretty sharply slowing economic data.
Tony, awesome to catch up. Not the last view, the last piece of that, but awesome to catch up. Tony Dwyer there of Canaccord Genuity. Thank you, Tony. Tony's not alone, TK. I heard this from Peter Cheer of Academy as well. He said, look at the wealth destruction that's taking place right now. Look at what's happened in the market, equities, bonds, crypto. Look what's about to happen with housing, and think about what that's going to do to the consumer ultimately.
The real idea here from Tony Dwyer, who's had the courage to be in the market like Ben Laidler for years, is you've got to have a theory, you've got to have a setup, you've got to have a story. And his is fundamentally, this is a Fed that will blink. And I think that's the question for Jobs Day tomorrow. That's the question for all of our analysis up to JP Morgan earnings, is what are those items that changes the Fed? I'm not sure I know what they are.
Is that the question for that white building behind us, for the White House as well?
That's a political question. We're going to hear today from White House officials, folks, and they're going to, first thing out of their mouth is, look what we did about the gallon of gas. You know that's what we're going to hear.
It's started to come down just a little
Petrol's come down in America, John.
Petrol, nice. Do you think that's a big enough difference for the people in this country right now?
For certain people in this country, speaking a simple political dialogue, read 1600 Pennsylvania Avenue, that's all that matters. We're looking at a much more complex dialogue. So is Boris Johnson.
Looking forward to catching up with members of this administration. We'll be doing that throughout this morning. We'll catch up with Heather Boushey. We'll also be catching up with Brian Deese, the director of the National Economic Council. All of that coming up this morning. Good morning from the nation's capital with Tom Keene. I'm Jonathan Ferro. This is Bloomberg Surveillance. Live from the nation's capital this morning. Good morning, alongside Tom Keene. I'm Jonathan Ferro. Together with Kaylee Lyons back in New York City. And Kaylee, in this market, we've got a lot to talk about.
We always have a lot to talk about these days, John, and yet even with all that we've been talking about, fear of recession really first and foremost, in addition to political turmoil, we're coming off of 3 days of gains on the S&P 500, and those gains are continuing in the future session this morning. We're up about 8 points on S&P futures, or about 0.2%, about the same for the NASDAQ 100 futures, and you're getting a little lift of the small caps as well. They're up about 0.3. But where a lot of the volatility has been concentrated is in the bond market. Of course, we got those Fed minutes yesterday at 2 p.m. Eastern time. You saw a massive move at the short end of the curve as the Fed talked about its focus on inflation, seems to be teeing up a move of either 50 or 75 basis points this month, coming up in just about 3 weeks. And as a result, you have an even more deeply inverted yield curve. Right now, the 2-year Treasury yield, it's only up about a basis point or two, but it's still north of 3%, whereas the 10-year yield right now trading at 2.9538, your 30-year yield at 3.14 at the moment. So that yield curve reflecting the concern out there that the Fed is going to move aggressively. Short end goes up. That may cause an economic slowdown, a little bit of pressure at the longer end. Finally, when it comes to the political situation, our focus is, of course, in the UK with Boris Johnson, the Prime Minister, planning to resign at some point today. You initially saw a much stronger pound on the back. We've seen some fluctuation. Nonetheless, the pound is stronger by about 0.7% against the U.S. dollar. We are trading right at that 120 level. The question really surrounds the trajectory of fiscal policy and monetary policy as his resignation comes, as the UK is dealing with a serious cost of living crisis, Tom.
Kelly Lyons, thank you very much. And TK, we're still waiting to hear from the Prime Minister, potentially in the next 30 minutes or so. There's been reports that midday local time we'll hear from Boris Johnson.
Midday in London, and of course here in the early morning in New York, and you really wonder what he'll say. I have memories of you covering this out of our London shop, of David Cameron coming out a very changed David Cameron. How does Boris Johnson adapt and adjust to us? It's a huge mystery,
I think
isn't
the
it?
fact you don't have to think that far back for this change of the baton from Prime Minister, from Conservative to Conservative, just goes to show you about the moment we're in, Tom, in British politics. We've done this many, many times in the last few years.
It's like the Wars of the Roses. I mean, that's what it amounts to.
Is that how you're going to characterize this situation?
I am, and I'm going to speak to someone expert on the Lancasters and the Yorks, and also Game of Thrones, which is probably thrown in here as well. Adam Posen should always be with us in Washington. He's president of the Peterson Institute, former Bank of England Policy Committee member, and with the Peterson Institute has provided terrific economic leadership, and right now timely Brexit leadership as well. He had a root canal done at the Royal College of Surgeons recently with the Peterson Institute and gave an important speech. You spoke about what Prime Minister Johnson wants to do, which is make it a global Britain. How much damage has this Prime Minister caused in the effort of the United Kingdom to move forward?
Thanks for having me, Tom. And this this Prime Minister who thinks he's a president has caused untold damage. The Brexit situation by doing brinksmanship with the EU over Northern Ireland was huge. It undermines trust, it undermines certainty for investment. It shows how damaging Brexit is, that on the one hand, Northern Ireland's doing better than the rest of the UK because of the non-implementation. And even his crazy Brexit minister, Rees-Mogg, said, I can't fully implement Brexit because it'll just make inflation go higher.
Can the parliamentary system, the present structure, survive modern news flow, modern acuity, the speed of information today? It seems, I make a joke about the Wars of the Roses. This is not funny. Lancasters and York's had time to breathe.
Yeah, this glorious summer of the son of York is already coming to an end. And as Jonathan was just saying, you've got turnover in prime ministers so repeatedly fast. But it's not just there, right? I mean, we have politicians disliked on both parties in the US. We have in France, Macron go from a win to a few weeks later, a complete setback in parliament. We have a genuine, like the 70s, crisis of democracy. There was a famous report, Tom, you're too young, but Sam Huntington and others wrote for the Trilateral Commission back in '73 about the crisis of democracy.
There's a first for everything.
You're
too young.
You're just killing me, Adam.
You're raising a really important
He's clashing with me.
I'm going to save you both. I'm going to save you both so you don't clash anymore. On the policy front, on fiscal policy, there's a mechanism to deal with this.
Yeah.
You understand the perspective here. There will be a new leader of the party.
Right.
There will be a new prime minister. There will be immense pressure to call for an election. Right. I have no idea if that's going to happen. What we need to work out from the fiscal side is what is the optimal fiscal policy right now to address the problems we have in this economy. Problems that are not just unique to the UK, they're similar to Europe and here in the United States as well. I can't work out what that policy setting should actually look like, what we should be asking from the next government.
It's a tough situation, Jonathan. You're absolutely right. In the UK, because it shrunk itself through Brexit, it's more vulnerable to being an echo chamber for shocks. So as I argued last month, when the inflation hits the same as everybody else gets the inflation, it resonates more and amplifies more in rattling around in the UK because you got a more limited labor market because they've shut out the EU workers. You've got less inputs and more expense to get inputs because of the Brexit red tape as well as the pricing. So what you need is a fiscal policy that simply has to accept that that's the reality. And the biggest thing that they can do is keep the fiscal balance on the right track because they are small now and you can see the pressure on the pound. It may have popped up a little with the prospect of Boris Johnson's departure, but in the end, they have to avoid overheating more than anybody else of this size.
Governor Carney, I remember bringing up a few years ago, he said the speed limit of the UK, the British economy, has changed.
Yeah.
That once you become supply constrained, and perhaps permanently so, that you start to bump against this inflation problem perhaps more often than not. And I wonder whether we've broken into perhaps a new regime that is going to stick around. Adam, I'm just wondering how you're thinking about that dynamic and whether that's unique to the UK or is that a problem we all share?
No, I think it's more unique to the UK. More unique isn't a real word, but anyway, I think it's primarily UK and not US or Europe. I think people are making a mistake if they think we're in a new inflation regime in general. I think we're going to fall back. But in the UK, you've fallen back towards the 70s, so it is a new regime, and they have to worry more. I've been saying this since Brexit. The Bank of England, and we're seeing it now, has to keep one eye on the pound, one eye on inflation expectations in a way that they didn't before.
Adam, let's catch up here on the real Adam-posing theme of the last couple of years, and no one has captured this more than you. Olivier Blanchard had the courage at the IMF with Stiglitz to begin to consider 4% inflation as a goose out of the great financial crisis. You've carried that forward to say the new 2% is 3%, and I see an entire world, an entire zeitgeist catching up with Adam Posen. Refresh that right now. Does Jerome Powell have to go to 3%, or institutionally does he have to stick with 2%?
In name, he's going to have to stick with 2%, Tom. What I had been hoping was we would have a little bit of inflation, and that would allow them to opportunistically say, okay, we're above 3, we're not going to go all the way down to 2. Given the credibility concerns, which I think are overdone, but for the moment are real, they're not going to be able to say that. They probably can't say that until the next strategic review, which is, 2024, 2025. What they can do, however, is what's likely to happen, which is they're going to bring inflation down. It may be second quarter of 23, it may be third quarter of 23. They'll get it down so it's starting with a 3 handle. And there may be a recession that goes with it. And at that point, they're not going to ease up before then, but they'll ease up then. It'll be de facto looking like 3.
For global Wall Street, and I've got to be very careful here, folks, we have a cardinal surveillance rule. We do not do differential equations with the White House in the background, ever. But the math here is really important. We're at, say, 9% inflation. It's highly nonlinear, highly non-smooth to bring it down. Which inflation point matters to you right now? Is it getting to 5%? Is it making that first tick down? Or do we have to wait to get down to 3% to get any sense of market calm?
No, I think once you're on 5 and it's clearly below 5 and it's clearly trending down, you should have the market calm. You're already seeing the calm, frankly, in the long bond. Not calm about the recession, but calm about inflation. In all the forwards, that's what you're seeing. And so I think they just have to, the big issue, which goes to my colleague Blanchard and Summers, is how much wage inflation is there going to be? The big difference right now is not that we all got that right in Peterson, that the inflation was going to be much higher, and Larry and Olivier did their job great and did that. But the issue is how costly it is to bring it down, how high the terminal rate has to be. And I still take the under versus Larry and Olivier because I think the wage inflation is going to tail off. Now, if it turns out unit labor costs are still going up, in a few months, rather than starting to trend down, then Olivier and Larry are probably right, in which case we're going to see you're going to have positive real rates. There's still hope we don't have to go all the way there.
The payroll's tomorrow. Let's talk about the incoming data over the last several months. What we have seen is decent gains on the payrolls front. Unemployment has actually stopped coming down, even as we've achieved that, and wages haven't accelerated. Now, some people sitting here might say, maybe this labour market is not as tight as we perhaps thought it was. What would your take be from just looking at the data over the last couple of months?
Well, to be honest, just looking at the data, Jonathan, it's screwy data. I mean, what we've got is the labor market numbers, which generally have been the most reliable data for the U.S. or any major economy. You rely on your labor market numbers to tell you what's going on. And they've been really completely out of whack because, remember, we had at least on paper a contraction in the first quarter, and yet we see these incredible labor market numbers. We see vacancy ratios meaning number of jobs available to job seekers at levels we've never seen before. We have a new paper, as it happens, coming out from Peterson, from Blanchard and Summers, looking at this. It'll be out probably next week. And they basically say, you got to take this seriously. The labor market is genuinely very tight. I'm more of the persuasion, you look at the numbers, if they don't make sense, there's something wrong with the numbers.
So if you're a policymaker again, how would you interpret the incoming information? What would you look at? We've heard from Chairman Powell, who's looked at things like consumer expectations on inflation in UMich. That's new to all of us. That's a little thing in a data point that we kind of used to pay attention to, and now it's the difference between 50 basis points and 75.
Yeah, I think that focusing on that one data point and using that to explain the 75 versus 50, I think was a mistake in communication, frankly. I think what they've got to be focused on are two things. They've got to be focused on trends in unit labor costs, meaning productivity, wages net of productivity. And the second thing they've got to be looking at is the longer term expectations in the bond market. Both of those are looking flattish to down.
Right. Very quickly here, we have an experiment underway behind us. A central banker, a Secretary of Treasury. How's the Yellen experiment going?
I think her signature issue, which is the international corporate tax deal, was the right priority for her and for this country. I think she did a good job of getting as far as it has gone, but now somehow you have to get the Senate to buy it. I think the American Rescue Package was too big in too short a time, but that was foreordained.
Should she step aside? She served her public duty.
I don't talk about individuals. I don't. Even individuals I respect greatly, or because individuals I respect greatly.
John asks me every day, should I step aside?
I do not ask you that. Someone's going to take that seriously.
It's like Trump. They're going to have to drag him out kicking and
Tom's like Trump. Can we clip that and just play that out through the rest of this day? I just wonder, Adam, and just briefly, would you even call the American Rescue Plan the Yellen experiment?
No, it was that was exactly my point. I'm sorry I didn't get it out properly. It was Pelosi and Schumer with Biden's acceptance that was the plan. Whether or not, I have no idea what went on in the White House and Treasury in the decision. But the biggest issue was, once that plan was clear, it falls on the Fed. The Fed should have been tightening and worrying more and forecasting more inflation once that plan hit.
This has been wonderful.
Adam Posen of the Peterson Institute. Adam, thank you.
Thank you.
And TK, we're still dealing with the consequences right here, right now, today.
We are. I mean, there's no question about it. And again, the mystery to me is what the labor market can do, as Dr. Posen said, and that's Jobs Day.
Live from the nation's capital this morning. Good morning. Payrolls Friday coming up tomorrow morning.
He's not only lost all of his popularity in the country, he's lost most of his popularity in his own party. A majority of conservative voters now want Boris Johnson to resign. It's surely at this point his tenure is written in days, not even weeks.
Or maybe minutes, or perhaps hours. That was Ian Bremmer of Eurasia Group, the president, weighing in on the situation of the Prime Minister in number 10 Downing Street. From Washington, D.C. this morning, good morning to you with Tom Keene. I'm Jonathan Ferro. Here's the price action for you, shaping up as follows on the S&P 500. Coming into today, 3 days of gains on the S&P futures. Just a little bit firmer, higher by a third of 1%. Yields continue to grind higher on a 10-year by 2 basis points to 295. And that curve inversion, Tom, is very, very much an issue right now for a lot of people. It's a feature of this market.
The feature of this market is a curve inversion where every basis point counts. A basis point is 0.01 percentage points.
Thank you very much for that. Thank you.
So to go from 5 basis points to 0 is 0.05, and we've come down much further than that to a negative 0.07. I'm also watching weaker yen. And John, we've got to remember, as you said, very quietly, 3 or 4 days in a row, we've seen equities lift, and suddenly a VIX under 27 is not a small matter.
Are we doing Bond Market 101 through the rest of this morning?
We are.
Are we doing that with the White House a little bit later?
White House, where they need Bond Market 101 at all times.
You said that, not me. You said that, not me.
Let us continue here, and we continue, of course, on what's going on in the United Kingdom. Tina Fordham is truly expert at this, founder and geopolitical strategist for Fordham Global Foresight, and we're thrilled that she could brief us this morning on what she observes from London. Tina, thank you so much for joining us. The distinction of the moment is perhaps we see Prime Minister Johnson walk out of 10 Downing Street and speak to the nation or his party or to the world. Who will he speak to?
Johnson is obsessed with the idea that he has a kind of a U.S. presidential style mandate, right? He keeps talking about how many millions of voters voted for him, but that's not the system that we have here in the UK. It's parliamentary democracy, and you've got a lot of pushback, including from within his own party, about how he sees his mandate. However, his time is up. He's resigned as the leader of the party. He still believes, I think, that possession is 9/10 of the law, and seems determined to stay in number 10 until an October leadership contest. But this isn't U.S.-style politics, and I think it's important for your viewers to understand it's a different system.
Ben Wallace, the defense minister, was scathing about the idea of staying in office through October. How can he have power as a lame duck prime minister, and particularly given a war in Ukraine?
And it's an important question, right? So the difference, again, compared to the U.S. situation, lots of people comparing what's happening here in the UK to Trump. well, there are a lot of differences. One is that the Houses of Parliament isn't on fire, and people aren't kind of breaking into it. Ben Wallace is in good company amongst conservative MPs and cabinet members, talking about how the prime minister should not stay in office that long. And so it may yet be the case that the leadership contest is moved forward. I think there's an element of vanity at play, because if Johnson leaves now, he ends up with the rather dubious distinction of having served a shorter term as prime minister than either his predecessor, Theresa May, or Gordon Brown, the former Labour prime minister. So I think there's a bit of that at work.
Tina, if I'm in the market this morning, I'll find this either depressing and or entertaining. But ultimately, I'll be trying to work out whether a fiscal shift is in store from the next government in the UK. Do you think there is a fiscal shift brewing here in the United Kingdom, a change from Chancellor Sunak to something else?
Well, and that's where there are limits to the comedy aspect. I mean, you know, the Economist front cover says clown fall. Lots of jokes going on. And this is a prime minister who, of course, has kind of styled himself as being, kind of liking his banter and that sort of thing. The city hasn't taken this too hard yet. We see a little movement in sterling, but as you point out, Jonathan, what investors, UK investors, have been hoping for is that a successor to Johnson, or indeed his new chancellor, might actually not make good on promises to raise taxes. This is also in turn raising concerns about the state of UK public finances, where the market has been expecting a 50 basis point hike in August from the Bank of England. So how does this affect all of these things? That's where the uncertainty of postponing the leadership contest until October is very problematic. I think you will see an inclination from the Conservative Party to want to avoid triggering a new election by, trying to still give out more goodies at a time when the country can't really afford it.
What are the goodies that you think they can actually deliver, Tina? You said at the end that they can't afford it. What can they do? Because as you've pointed out, for many people in the UK right now, they've got bills to pay at the end of the month. Energy prices are going up. They could be going up again before the end of the year in a material way. What can they actually do to support the British economy? What can they afford to do?
All they can do is try to buy time. And this is what we see this prime minister trying to do. Inflation and strikes go hand in hand. So we've got the summer of discontent. The airline chaos this summer is going to upset a lot of people. And then it's not just the kind of irritation factor. It's putting real pressures on households. So resetting the income tax thresholds will be something that they'll be inclined to do, to not raise taxes. I think no one's talking about this yet, but whenever I start to see this kind of, dislocation, I start to wonder which industry might be on the sharp end of a sort of a windfall tax. That tends to be low-hanging fruit. But the summer of discontent with strikes is going to be followed by a pretty tough winter. The UK isn't as exposed to other European countries to Russian gas supplies. But the UK is already talking about rationing and possibly not meeting its obligations with other countries. Taking over the leadership of the UK is going to be a bit of a poisoned chalice. But politicians, get into power first and then work out what they're going to do. And that frustrates the city.
Well,
Tina, that's not going to change. Tina Fordham there.
Wonderful
Fordham
brief.
Global Foresight. This is a headline just crosses the Bloomberg, Tom, according to one official. The Prime Minister considering whether he can stay on as a caretaker Prime Minister at the same time Sir Keir Starmer, the leader of the opposition party, the Labour Party,
I'm just
on the
baffled.
BBC. I know you are, saying the Prime Minister should leave now.
On a July morning in Washington, this is original politics, and I would say for our American audience, it does redound back to America, in that these are things that are unimaginable within our process, and I can't believe I'm saying that with what we've gone through with President Biden, with President Trump, and frankly, moments before that.
I keep stressing there is a mechanism to deal with all of this.
What
we
is
don't
it? Please,
understand,
help
what we
me.
don't understand is the sequence of events from here, Tom, and a timeline for that sequence of events. And to Tina's point, there are things that need to be dealt with right now. And if you don't have a government in place to deal with them, Tom, we've got an even bigger
What
problem.
is a caretaker government? They have, do they have double-digit inflation?
They may have double-digit inflation to deal with through the rest of this summer, Tom. And that's the problem. Yeah. And there are many. Let's be clear about that. Futures up 0.2% from DC this morning. Good morning. With Tom Keene, I'm Jonathan Ferro. This is Bloomberg Surveillance.
The market is really pushing the Fed right now and saying, how much longer is this rate hiking cycle going to last?
Anything that's sensitive to the economy is just being taken out of the woodshed and destroyed right now.
Take a deep breath and not be so negative on equities. We've priced in a lot of risks so far this year.
We do think that the economy will be able to withstand higher overall interest rates.
Right now, I think we can confidently say we're not currently in a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene. I'm Jonathan Ferro. And TK, where do you want to begin? With the building behind us, or do we look across the Atlantic to the United Kingdom and a very lonely number 10 Downing Street for this Prime Minister?
Weeks of planning for our joy here in July in Washington out the window, and we're waiting for the Prime Minister. Maybe we're going to see him in 30 minutes, but we don't know the theme. We don't know what he's going to say, the set of uncertainties for the United Kingdom. And I might point out, just as an aside, for Mr. Zelensky in Ukraine is substantial.
He has been a solid partner to the Ukrainians. Mr. Zelensky would confirm that, Tom. On the Prime Minister's exit, we know he's going to walk down that road. What we don't know is how long that road actually is, because there have been reports already in the last 30 minutes that perhaps he might try to stay on as a caretaker PM. And don't you dare ask me to define what on earth that means for this country in the UK.
The original process here redounds back to the opposing party, but it's different than America. How does Labour, how does Mr. Starmer react at this moment?
Clearly, the sequence of events will be as follows, Tom. The Prime Minister engineers an exit. I say engineers, it's been out of his hands. Then there'll be a leadership contest for the Conservative Party. Then there will be immense pressure from the opposition and the rest of Parliament to push for an election in the UK.
Can I be as dramatic like season 7 of The Crown to say the Queen steps in here?
How
or
can I
Prince of
take
Wales?
you seriously when you say things like that?
But come on. I mean, this is a crisis moment. We have a Queen who is fragile. Does the Prince of Wales step in and say, make that election now?
When you're in a crisis, Tom,
I'm just trying to get you in trouble here. Keep it
I
going.
understand, and I'm certainly not going to do that this morning. I'm going to stress two things. One, there is a mechanism to deal with this in the UK. It's not an original moment. We've seen it quite a few times.
Okay.
Two, I don't think the rest of the country right now bats an eyelid at what is happening in the UK. And by the rest of the country, I mean the country we're in. I mean the rest of the world. For the rest of the world, Tom, looking into the United Kingdom, on the hierarchy of problems right now that the rest of the world has, Tom, where does this feature? Where does this feature?
It's entertainment
Political
for a lot of other people.
Entertainment.
It is.
Now, you tell me, for the British public right now, is it entertaining? Perhaps so, a little bit of palace intrigue, but ultimately there are bills to pay at the end of the month, Tom. Energy prices are going up. And if I'm in the UK right now, looking at what's happening at number 10 Downing Street and across Parliament, I just need someone to deal with some of this. Some of the criticism that has been levelled at this government, and you can see it in the research notes on foreign exchange, is the lack of fiscal support in the country for the pain that some people are going through with energy prices at the moment. And what I'm trying to understand, in a very calm manner, Tom, is trying to understand whether we do get that fiscal shift from the next government, and whether they have the capacity to engineer that.
But then what we have here with our global Wall Street audience is the litmus paper of the foreign exchange system. We see a little bit of a sterling rally today, but I still see great uncertainty out there in the data.
We're down at 120. Nomura, Jordan Rochester, you see that new target? 115. Perhaps down to 110. You could see a whole lot more sterling weakness. Precisely. So what are we doing? We're importing inflation. We're facing the prospect of an even weaker currency, and no one can tell me with any conviction as to whether central bank rate hikes will actually mean a stronger euro or a stronger pound.
And we got to do this quickly. It's so important. The blur of headlines that we've seen in the last 20 minutes, ECB looking out to their next meeting and seeing that they have a fragmented theory about a fragmented policy.
I mean, you're going to wind me up. You're pushing my buttons. Apparently,
I'm trying.
Apparently, they have a name for the anti-fragmentation tool. They have a name for it.
Right.
But I'm not sure they have any idea
Somebody
when that's going to get rolled out.
Somebody emailed in. They said, "Are you guys on speaking terms when you're sitting that close together in Washington?"
We are just
We're
about.
doing lunch here at the Hay Adams after the show.
I can tell you it took a few drinks last night to get us this close.
We did.
And a cigar for this one as well.
Are we briefing? Are we dating right now?
Huskier.
Should
Are you and I dating?
Should we data or brief?
Oh, data.
Data, not dating.
I thought you were asking if we're dating.
No.
Step at a time, TK.
Okay.
Step at a time.
It's like Love Island.
Equity futures. You've been watching that. Look
No,
like this
no,
on the S&P 500. New
I'm
season,
watching
Tom.
Stranger
I haven't been watching it. Apparently it's available on Hulu.
It is, yes.
And other good streaming devices, maybe. Futures up
Save
a quarter
us.
of 1% on the S&P 500.
Look at
Yields just
oil.
a little bit higher at a 99 handle on WTI that has moved how quickly, Tom?
Well, it's moving a lot, but this is what we're going to hear from our two guests from the White House today. First thing out of their mouth is Joe Biden dropped the price of oil.
Brian Deese, the National Economic Council Director, is going to join us in the 9 o'clock hour. Do you really think they're going to celebrate this move we've seen in gas prices? Do you really think they're going to do that? But just before the president goes to the Middle East and potentially asks the Saudis to boost more oil, they're going to say we're happy with the trajectory of things?
No, they're not going to say the trajectory, but these are little nuances along the way for a beleaguered White House. Look at their ratings. They're beleaguered.
Do you know how many messages I'm getting about us potentially dating? Anyway, should we get your morning brief? We can do that with Kaylee
Save
Lyons.
us, Kaylee.
Hello, Kaylee.
Please.
All right, yeah, it's time to get the briefing now. Now, of course, we thought one thing was happening at 7:30. Now there's two big events happening at 7:30 Eastern time. One being apparently that resignation statement from Boris Johnson. The other being the ECB minutes or account from the June policy meeting. Apparently, according to Bloomberg's reporting, they don't actually have any clarity around that anti-fragmentation tool, even if they have a name for it. So maybe we're not going to get that, but we could get some insight into how they're thinking about a potential 50 basis point move come September, especially considering the euro is around its weakest level since 2002, trading at a 101 handle. Will the ECB hiking rates actually help that story at all? Then at 8:30 a.m. Eastern time, initial jobless claims data here in the U.S. 230,000 is the print expected. But remember, we have been seeing a tick up in recent weeks. So how does that set the stage for the non-farm payrolls report coming up tomorrow, considering this Federal Reserve is so focused on inflation and seems to be okay with the labor market softening up a little bit? And speaking of the Federal Reserve, we will hear from two Fed speakers today, Christopher Waller and Jim Bullard, speaking at separate events, but both at 1 p.m. Eastern time. This is an updated take potentially from the minutes we got yesterday, which of course are 3 weeks old. How has the thinking evolved as we get closer and closer to that July meeting, John?
Kaylee Lyons, thank you very much. We may hear from that Prime Minister as well, potentially in about 25 minutes' time, according to Sky News. 7:30 Eastern time, Tom, perhaps 12:30 local, but at the end of the day, who knows?
Who knows? I don't think anybody knows.
If we're listening to reports right now, Tom, that perhaps he's considering staying on as a caretaker PM, then I'm not sure we know precisely.
I don't see the apparatus like in the United States where somebody messages it out in the first 20 minutes.
Usually they walk out the door and put the podium there, and then you can work it out from there. We need to talk about this market, and we can do that with Alifia Doriwala, the Managing Director of Rock Creek Group. Alifia, can we start here? The Everything Pain portfolio. I mean, is anything working this year in 2022?
I mean, you talked about uncertainty on the political front just as much in the markets, right? I mean, there's three themes that everyone's talking about, and it used to be short-term themes. Now it's going to affect the portfolio for the next 2, 3, 4 years, right? Slowing global economy, monetary tightening and inflation, and the impact from the Ukraine-Russia war. Nothing's been resolved there. We're still in the same. Oil, $100, $105, $95, doesn't matter.
You and Ashani are too young to remember 78, 79 and the glory of the bond bear market then. You people advise on quiet money. You have never seen bond losses like this. How does quiet money recover in bonds, price up, yield down? What is the actual mechanism to do that?
Well, you know, it's very interesting. And so thank you for calling me so young, first of all. I appreciate that. I don't know if some of my colleagues will be as flattered. I think a lot of us can remember some of the pain points in the markets, though. And I think one of the interesting things about the fixed income markets today is we're looking very, very closely at where is the 10-year yield going to go, what timeline do we have, and how do we start to manage our fixed income exposure.
So you're gauging your bond recovery institutionally off full faith and credit?
Yes, for now. We haven't started to see a ton of signs of distress, but there are a lot of indices that we're looking at, a lot of metrics we're looking at to see if the corporate bond market is starting to crack.
How would you describe it? We've taken out the wides of late 2018, about 550 through those levels. That was enough for this Federal Reserve back then to pivot. Clearly different world, different inflation level. How do you judge what is stressful this time compared to what was stressful then?
Yeah, well, you know, we have the benefit of investing in a lot of debt financing types of strategies, right? So we're looking to see what is the underwriting, has it loosened? We're looking to see where will the cracks be? We're looking at the high yield market. I mean, spreads have widened over 500 basis points, right, in the last few months. We're looking to see where are the relative opportunities and are you getting paid for that risk? There's going to be risk in the market, right? But defaults would have to double if we wanted to see a huge loss in our high yield portfolio. So is it the right time to start stepping in? I'm not saying we're doing anything right now. I think it's a wait and see moment. And I think we're going to have to wait and see where things, you know, shake out. But there are pockets of opportunity that we are starting to see. And I don't think we have to worry as much about credit risk in our fixed income portfolio as we do about duration management.
What are you waiting for? Talk to me about what you're waiting for. You stress we're not doing anything right now. Why not?
Inflation. I think it's been clear by the Fed that that is their target. They're looking at inflation, and everything's hinging around inflation, and consumer demand is going to hinge around inflation. We have a huge earnings season coming up, right? I mean, July is going to be a bellwether of inflation expectations, what are companies seeing, what are corporates pricing in. Q1 was pretty good. Everyone can you know, admit to that. Q2, probably not as good. Q3 expectations are going to be worse. If consumer demand starts to fall, then I think that we will continue to see pain in the market, and we want to see the market shake out a little more in pain before we start making real investment opportunities.
The heritage of Rock Creek, when we meet with Afshani in Davos, is natural gas. She owns the high ground on the dynamics of gas and hydrocarbons as well. What is your response to the surge that they're living in continental Europe about natural gas? I mean, it's standard deviations out, isn't it?
The entire energy complex, we're in a different world, right? And there are a ton of investment opportunities, as you've heard from us before, in terms of the energy complex, in terms of natural gas, in terms of the tailwinds for renewable energy, wind, solar. There is so much that we can look at in terms of the next 5-10 years, and we're positioning our portfolios to take advantage of all of that. And unfortunately, Europe is going to take the pain in the interim.
You're advising. Rock Creek wanders into the White House today to meet with Amos and President Biden here on LNG. Can you be optimistic that LNG can rescue Europe by December?
Not by December. I think that's a heavy task. I think that everything that is going on within Russia and Europe is going to dictate whether Europe comes out ahead at the end of the year. But I'll tell you, we're not, bullish on Europe despite valuations, and it's because of the geopolitical tensions and the energy complex. How can you really be overweight Europe today?
That's the difficult question that a lot of people have. And Tom, for that matter, the rate differentials even matter to the euro when you can't tell me where the price of gas is year end?
You know where I feel on this.
I know exactly how you feel
on rate
about it.
differentials and spreads.
Alethea, thank you. What a great morning. I'm sorry you had to wake up so early as well.
Thank you very much.
They will question as to whether they agree to a 7 a.m. slot with us again.
Well, we need to explain this to our global audience that John and I in New York are rocking it at 5 a.m. industry-wide.
What time are you up this morning?
No, I mean just in terms of getting the city started.
Sure.
Washington, 8:30 is early.
Yeah.
8:30 is rude.
Try 9 o'clock.
Yeah, I was going to say 8:30 is rude.
Alethea Dorawala of Rock Creek Group. Alethea, thank you
so much.
Thank you.
We understand in about 17 or 18 minutes' time, according to a British official, the Prime Minister will be walking potentially out of number 10 Downing Street to deliver some kind of statement. We're going to hear from him potentially, Tom, at 12:30
He's
local
in briefings
time.
with Lawrence Sakat.
So that's in about 17 minutes. I'm pleased you're taking this so seriously.
No, well, it is a serious moment, but okay, how does this play in the Midlands? This is a serious moment. Do you sense that the nation's riveted to this? Or is it comedy?
How does it play in that so-called wall of seats that they won in the last election at the back end of 2019? A lot of people who hadn't put faith in the Conservative Party for decades and decades and decades did so. Have they been rewarded? Many people would suggest, Tom.
Well, we saw that in the recent few elections that there were, and maybe the Queen will call for a general election.
You're trying to cause trouble. That's what you're trying to do. In the next hour, Patrick Armstrong of Plurimi, and later we will hear from Brian Deese of the National Economic Council. This is Bloomberg.
Boris is a great personality. That's what actually appealed to a large section of the electorate. That's his strength, but it's also his weakness. And what has gone wrong is his inability to understand how very large sectors of the electorate feel about indiscretions.
The reaction to the Prime Minister's current dilemma in the United Kingdom. That was Lord Robert Hayward, the Tory peer and polling analyst. From Washington, D.C. this morning, good morning with Tom Keene. I'm Jonathan Ferro. Here's your price action this Thursday morning. Going into some economic data a little bit later, 8:30 Eastern, we get jobless claims. On to tomorrow. It's payrolls Friday. Equity futures elevated by 0.25%. We've had 3 days of gains into Thursday. It may well become 4. Yield just a little bit higher on a 10-year buy. Let's call it a basis point, Tom, at 293.72. And I don't think we can get away from this. Never mind euro dollar at 101. Crude at 99?
Yeah, I
That's
do
a
think
big change. That's a big change.
I'd lump in there as well. We don't often do it, but copper, whether you look at Chicago Copper or London Metals Exchange Copper, it's all the same. Breaking down, no, plunging.
You've said it a few times.
Plunging.
These things are happening in commodity markets with China where? Open, shut, lockdown,
well,
reopening.
the bond thing that we reported today, I don't have the data in front of me, 200 gajillion on bonds in China to liquefy the economy. That seems to be the strategy.
Are we going to see more of that? And with that in mind, what's the downside on commodities if that's what's going to develop in the world's second largest economy?
We will see it because of the politics of China, which is there are very important meetings coming up rapidly.
With regards to the politics on China, we need to talk about the politics of this administration on China and whether we do actually see a removal of tariffs. Start of the week. That was the story. I haven't heard anything in the last 24 hours.
Why don't you bring in our next guest and we'll start with China. And
our good friend, isn't this nice that she's close to us in person?
Her people said we could get, we could meet with her.
This is a beautiful thing. Anne-Marie here in D.C. alongside us. AMH, good to see you. We've heard nothing in the last 24 hours on this. At least I haven't. Perhaps you have. Where are we?
Still TBD. I mean, the president has been given a number of options whether or not to keep those tariffs on. Obviously, there's just massive divisions in the administration. You have those that are China hawks, especially. Then you have Ambassador Tai saying, I will lose all my leverage if you do this. Then you have others like Secretary Yellen have said they want to reconfigure the Trump-era tariffs. The issue is the tariffs they would be lifting would be things like bicycles, basic consumer goods, sweaters. This is not going to impact his biggest problem, which is higher food costs and gasoline.
The news flow moves. Anne-Marie, no one in American media has a better understanding of London, Washington than you do with your time there. I'm serious. And in this historic moment, there is a special relationship. How do we support a fractured prime minister? How do we support the parliamentary process of the mother country?
I don't see anyone in that White House coming out and saying anything bad about Boris Johnson today. What they are going to do is say, we maintain the special relationship between Washington and London, and we are here to support the British people. We always will be. Now, remember, when Joe Biden was campaigning, he said Boris Johnson was an emotional, physical clone of Donald Trump. They had a lot of hurdles to get through, but at the end of the day, they have supported each other. I would say two of the biggest things was the AUKUS deal, the nuclear submarine defense pact, and also stepping up sanctions against Putin. President Zelensky is in love with Boris Johnson, what he's done. But there has also been moments where they've, had some digs at each other. I would really recall the withdrawal of Afghanistan. Boris Johnson said that could have been done better. But at the end of the day, the relationship is what is important, not necessarily the individuals.
Somewhat of a schedule of 9 minutes until possibly we hear from the Prime Minister. Anne-Marie Horton, stay with us. And in London is Lizzie Burden this morning. Lizzie, paint the scene here before this historic moment for the United Kingdom.
Tom, the podium has just been set up in front of number 10 Downing Street. The officials are lining up. I had my finger on my ear because you can hear the protesters with their speakers. Here we go, it's beginning. Or maybe it's not. Let me tell you that there are reports that there are worries that Boris Johnson might not stick to the script. We're expecting him to resign. The question is whether he's going to stay on as a caretaker Prime Minister. Lots of MPs saying that they wouldn't be happy with that. He's the personal reason why they're resigning, but yet he's starting to make interim appointments, so there may yet be another surprise with this speech. Tom, I know you like a tidbit. If Boris Johnson goes immediately today, his tenure would have been shorter than his predecessor Theresa May's, but if he carries on as a caretaker Prime Minister until October, let's say, then he would beat her. But in any case, it's a really humiliating end for a Prime Minister who started with that landslide election victory, the biggest since Margaret Thatcher.
Lizzie Burden, of Bloomberg outside number 10 Downing Street. And a bit of a technical problem there, Tom, but as you can imagine, a lot of people competing for signal at the same time outside number 10 Downing Street. There's bound to be technical problems. We're about 6 minutes away. The podium's out. They'll do a sound check, Tom. Then we'll hear from the Prime Minister. To Lizzie's point, we know where this is heading. What we don't know is the timeline to get there. And that's what we've got to figure out in the next 10, 20 minutes or so.
Let's paint for our American audience particularly, John. You mentioned it earlier. The territory between the Tories and the rich South and Labour maybe is a stereotype up in the North. It was shocking how well Boris Johnson, with his leadership, it was shocking how well the Conservatives did defeating Corbyn and Labour. Those districts now, are they gone from the Conservative Party? Is that a safe statement?
They are going. I wouldn't say they're gone, but they are going. That will be chipped away at. You heard from a Tory peer about 15, 20 minutes ago, and what he said about the Prime Minister's personality, he called it a double-edged sword. The reasons that this Prime Minister has got in trouble are the reasons that some people found him appealing. It was off the cuff, it was loose, it was fluid. People like that kind of thing. But ultimately, can you run a government that way? And clearly, you can't run a government in a haphazard way. The other issue I'd have as well, Tom, sitting here, and I think you have the same problem, trying to understand the ideology of this Prime Minister and the kind of policies that he would like to engineer. It's a tremendously difficult thing to do.
Twice this morning, folks, in our coverage with experts, including Tina Fordham, you and I have heard this is a guy who wanted to be presidential. Explain how odd his presidential is from the prime ministerial from Tony Blair on.
If I back that up, I would be offering my opinion and endorsing that view. All I can say is that is a
We're
view
among friends.
of
Anne
this
Marie's
Prime
here,
Minister.
Lizzie's at 10 Downing.
Let's be clear about
Give us your
this.
view.
In late 2019, the Prime Minister went for an election and ended up with a much bigger majority than people anticipated. Now, is he being presidential? I'm not going to give you my opinion on that. I will say this. That was a Conservative Party with a big majority that wasn't just concentrated in the south of the country, they had the north of the country as well. And the Prime Minister believes that that was an opportunity for him to do something big. The problem that a lot of people have, Tom, is that opportunity hasn't been used.
Well, we're going to have to see. Moments away. An extraordinary moment.
20 seconds away. We'll be going to a commercial break. And then 4 minutes after that, we might hear from the Prime Minister of the United Kingdom. Boris Johnson outside number 10 Downing Street, potentially on the other side of this short break. From Washington, D.C., this is Bloomberg. Live from the nation's capital, I'm Jonathan Ferro in Washington, D.C. this morning. Good morning. With Tom Keene, I'm Jonathan Ferro. Throughout this morning, we'll be catching up with officials from the White House, including Brian Deese of the National Economic Council. Due to catch up with him in the next couple of hours. The focus at the moment for us and for many others too, on this door right here, number 10 Downing Street in London, the United Kingdom. Any moment now, the Prime Minister, Boris Johnson, will walk out of that door, Tom, approach that podium, speak through that microphone, and offer what many people believe will be the road to his exit.
For those of you worldwide, it is truly an original crisis. They're always original, but this one is so different. Did you see this coming, John?
A lot of people did, Tom. A lot of people did. And we've seen this before. I want to keep stressing that we have seen this before, that the British people have a mechanism for dealing with this. If the Prime Minister exits, there will be a leadership contest. Once we've established who the leader of the party is, there will be a huge, huge push to work out if we get another election. Here is the Prime Minister, Boris Johnson.
Thank you. It is clearly now the will of the Parliamentary Conservative Party, that there should be a new leader of that party and therefore a new Prime Minister. And I've agreed with Sir Graham Brady, the chairman of our backbench MPs, that the process of choosing that new leader should begin now. And the timetable will be announced next week. And I've today appointed a cabinet to serve, as I will, until a new leader is in place. So I want to say to the millions of people who voted for us in 2019, many of them voting Conservative for the first time, thank you for that incredible mandate. The biggest Conservative majority since 1987, the biggest share of the vote since 1979. And the reason I have fought so hard in the last few days to continue to deliver that mandate in person was not just because I wanted to do so, but because I felt it was my job, my duty, my obligation to you to continue to do what we promised in 2019. And of course, I'm immensely proud of the achievements of this government, from getting Brexit done to settling our relations with the continent for over half a century, reclaiming the power for this country to make its own laws in Parliament, getting us all through the pandemic, delivering the fastest vaccine rollout in Europe, the fastest exit from lockdown, and in the last few months, leading the West in standing up to Putin's aggression in Ukraine. And let me say now to the people of Ukraine that I know that we in the UK will continue to back your fight for freedom for as long as it takes. And at the same time, in this country, we've been pushing forward a vast program of investment in infrastructure and skills and technology, the biggest in a century, because if I have one insight into human beings, it is that genius and talent and enthusiasm and imagination are evenly distributed throughout the population, but opportunity is not. And that's why we must keep levelling up, keep unleashing the potential of every part of the United Kingdom. And if we can do that in this country, we will be the most prosperous in Europe. And in the last few days, I've tried to persuade my colleagues that it would be eccentric to change governments when we're delivering so much, and when we have such a vast mandate, and when we're actually only a handful of points behind in the polls, even in mid-term after quite a few months of pretty relentless sledging, and when the economic scene is so difficult domestically and internationally. And I regret not to have been successful in those arguments, and of course it's painful not to be able to see through so many ideas and projects myself. But as we've seen at Westminster, the herd instinct is powerful. When the herd moves, it moves. And my friends, in politics, no one is remotely indispensable. And our brilliant and Darwinian system will produce another leader equally committed to taking this country forward through tough times, not just helping families to get through it, but changing and improving the way we do things, cutting burdens on businesses and families, and yes, cutting taxes, because that is the way to generate the growth and the income we need to pay for great public services. And to that new leader, I say, whoever he or she may be, I say I will give you as much support as I can. And to you, the British public, I know that there will be many people who are relieved, and perhaps quite a few who will also be disappointed. And I want you to know how sad I am to be giving up the best job in the world. But them's the breaks. I want to thank Carrie and our children and all the members of my family who have had to put up with so much for so long. I want to earn support that you have given our police, our emergency services, and of course our fantastic NHS, who at critical moment helped to extend my own period in office, as well as our armed services and our agencies that are so admired around the world, and our indefatigable Conservative Party members and supporters, whose selfless campaigning makes our democracy possible. I want to thank the wonderful staff here at Chequers, here at Number 10, and of course at Chequers, and our fantastic prop force detectives, the one group, by the way, who never leak. Above all, I want to thank you, the British public, for the immense privilege that you have given me. And I want you to know that from now on until the new Prime Minister is in place, your interests will be served and the government of the country will be carried on. Being Prime Minister is an education in itself. I've travelled to every part of the United Kingdom, and in addition to the beauty of our natural world, I found so many people possessed of such boundless British originality and so willing to tackle old problems in new ways that I know that even if things can sometimes seem dark now, our future together is golden. Thank you all very much. Thank you.
Nobody is indispensable, including this Prime Minister. Nobody is indispensable. The Prime Minister of the United Kingdom, Boris Johnson, resigning, Tom. Telling us just moments ago that we'll have a timetable for this leadership handover potentially sometime next week.
I felt very foreign there, very much from a distance. I was shocked at the language that I heard yesterday in the House of Commons on sex and on some of these immediate themes. Was he let down by some of his government?
I think he let down himself, Tom. When we really think about things, the reason people resigned is because a poor judgment of character. That is why so many people resigned. And if he was let down by someone else, ultimately, Tom, what he's being accused of is that he already knew what this individual was about. He already knew the allegations against that individual. He was aware of them. And for many people, that was the reason they resigned in the last 24 hours, Tom.
What does he do today? What does he do tomorrow in what I would suggest is an original caretaker prime minister role?
We've got to figure out what this leadership handover looks like. And at the moment, we don't know. He thanked many, many people, Tom, and he talked about his commitment to Ukraine and fighting against what he believes is Russian aggression in Ukraine and supporting the Ukrainians to fight against them. And perhaps that support will be needed for years, Tom, not just months. And I think it was important that the Prime Minister came out moments ago and suggested that the British people as a country will be behind that effort beyond Prime Minister Boris Johnson as a Prime Minister.
Did he apologize?
I didn't hear an apology.
About the specifics that I was shocked by yesterday?
I heard many thanks. I did not hear an apology. What I did hear was I regret. I regret that XYZ has happened, but I didn't hear an apology. So we get some coverage for you. We can do that from Westminster. We can do that with Francine Lacqua in London. Francine, your reaction to what you've heard in the last 10 minutes.
Well, good morning to you both. I think this was a very strong speech. This was a prime minister that was focused. You're absolutely right. He talks about regret, but he does not apologize. What people really, and you can hear, the sense of the atmosphere, it's tense, it's palpable at Westminster, and actually it was scenes of chaos right outside Downing Street, is that they wanted to know the timetable of when the prime minister would actually step down. Now, he's resigned, but he has also said that he will stay on until a new leader is found. This could take weeks. This could, of course, take months. The initial plan was to get it done by October when there's a party conference. Now, speaking to MPs, they want him gone now because this is different from when David Cameron resigned and stayed on as caretaker. This is different from when Theresa May stayed on as caretaker. This goes to his character. This is a concern about ethics, and so a lot of people just wanted him gone full stop.
Francine, more than anyone I know, you have interviewed the players involved in this drama. Which individual are you most focused on for this Thursday and into the weekend?
Two things, Tom. First of all, we need to look at the contenders list. Now, there's about 7, 8 people that for the moment are in pole position. They're very different. Some are charismatic. Some are considered as a better, safer pair of hands. So we look, of course, the contestants. But I think of the Bank of England, because if you look at the cost of living, if you look at rampant inflation at a 4-year high, and the pressure they have in trying to control that without trying to tilt this country into deep recession, you don't have a government. You don't really have a government that's working. Sure, number 10, 2 minutes before that speech, appointed a number of ministers, a number of secretaries to take over. But the concern, if you're the Bank of England, is that you see this void politically and you wonder what that means for your economy.
Well, Francine, you'd have to figure out whether we get a shift in fiscal policy, and I think at this point it's probably impossible to do so. You're in contact with the Bank of England in a way that we're not. What are you expecting Governor Bailey and this Bank of England to do in the future?
Well, I mean, the problem, John, as you say, is that actually we absolutely have no idea fiscally what will happen. We were expecting a big speech. Initially, Boris Johnson, Rishi Sunak. When Rishi Sunak resigned, it was Boris Johnson and the newly appointed Chancellor for next Wednesday. Now that Boris Johnson has resigned, if he even stays on as caretaker, we're not going to have that speech. So fiscal policy at the moment is completely upended. You don't exactly know what they'll do also with wage increases for public policy. And so how do you set interest rates in this kind of environment? Remember, you and I also talked about this. The Bank of England, in guiding the markets, talked about being more forceful. We heard from the chief economist yesterday that they may be ready to hike interest rates at a bigger pace, certainly that we were expecting a couple of weeks ago. But when you don't have a working government, when fiscal policy is up in the air and you don't know whether taxes go up and down, how difficult is it to set monetary policy for an economy that you don't fully understand?
Incredibly difficult. Francine, great work over in Westminster, as always. Francine Lacqua on the latest with the British Prime Minister, announcing his resignation just moments ago. Here in Washington, D.C., I'm pleased to say, still close with us, is Bloomberg's Anne-Marie. MH, this Prime Minister criticised for his conduct domestically. You've talked about how he's been received on the international stage. Just walk us through piece by piece a legacy, I guess, for this Prime Minister on the international front.
Well, honestly, just getting back from the G7, the Bavarian Alps, he was almost the class clown of the G7. He's picked up on hot mics talking about we need to show Putin we're tough, let's show off our pecs, take the jackets off, no ties. And it was all almost a little bit of fun and games. And I think that is how he's perceived by international leaders. But again, they have to work with the United Kingdom, especially the United States, a special relationship. They will not make this personal. They will want to make sure that they're there for support for the British people and the next leader.
The war is not stopping. The struggles of Brussels is not stopping. I believe we'll speak to Maria Tadeo here in a moment. What is the timeline you perceive for them to fix this problem? It can't be much more than days, right?
Fix the UK problem or fix Ukraine?
Fix the Prime Minister problem. Can't.
Well, there's a slew of candidates. We don't even know who the front runner is. He's going to have a meeting Thursday, we hear, with his interim cabinet and decide how they're going to continue the next few months until they get a government.
How do they do this? How do they?
The issue is he's going to become a lame duck. How does he get anything done in the interim?
Domestically, there will be pressure perhaps for a change. On the international stage, and I think the Prime Minister has gone out of his way there to suggest that there will be no deviation in British policy. In the meantime, if he remains as a caretaker Prime Minister, and I have no idea how long that will be, and once he hands over to new leadership.
John, we are trained. Civics 101 in America. Sure. There's a president, there's a vice president. I believe it's the Speaker of the House. Yes. And then Anne-Marie and I flunked the 5 people after that. What's the equivalent in your world?
This is not a presidential system. I'm not sure how many times I've got to say that
this morning. It's a parliamentary system.
It is not a presidential system. You will change the leader of the Conservative Party, and therefore you will change who is the Prime Minister. But ultimately, to expect a deviation in foreign policy at this point, I would be shocked if you had any deviation whatsoever on the key issues of this moment. And AMH, I believe that's the point you're trying to make this morning, that if you're the Ukrainians waking up and the Prime Minister is gone, I can't speak for President Zelensky, but he's on the record repeatedly talking about his partnership with the Prime Minister, how close the two of them are, how thankful he is. But how worried would you be that you're going to get a change of course, a change of policy from this from the next Prime Minister, this government?
The aid's not stopping. The aid will continue to flow. Boris Johnson had something very charismatic and special, I would say, with President Zelensky. While you have Olaf Scholz and Macron wanting to continue that dialogue with Putin, Boris Johnson was not on that page. He came out emphatically, constantly bashing President Putin.
On a plane to Indonesia, Liz Truss, foreign minister for the nation. Is she one of the candidates?
Possibly. Tom, throw everyone's name into the hat.
Really, you do that?
I've got no idea. You have to put yourself forward. The Conservative MPs will decide between themselves how to whittle that number down, and then it goes to the membership.
And remember 2016, everyone thought it was going to be Boris Johnson, and then Michael Gove
had something to say about it. So I'm not going to make any predictions because I think British politics at this point is impossible to predict. Anne-Marie, good to see you. Has Anne-Marie brought me a hot chocolate?
I did. I ordered a hot chocolate. I ordered you bacon.
And what's so sad here is this glorious hotel, the Hay Adams, folks, is where we are with all of the history of the Hay Adams. I looked in the menu, room service, there's no tang.
There's no tang.
There's no tang here.
I wonder why.
I was absolutely shocked. We're going to digress here from this truly historic moment again, and we'll continue our coverage from London. And we do so on the effect of pound sterling. Ibrahim Abari is a student of British politics and a student of what the markets speak of that. He's global head of foreign exchange analysis at Citigroup. Ibrahim, good morning. How do you link pound sterling gyrations into the UK politics of the moment?
Great to be with you. Great to be with you, Tom and John. And we think politics matter at this moment. They matter for the British public. They matter for the international community, as you discussed. But they definitely matter for financial markets as well. And unfortunately, that uncertainty that will linger over who will be in charge of the British government is yet another negative. But I should stress that the drivers of the sharp depreciation in the pound, 12% or so this year against the dollar, they haven't really been political. They've been in the context of broad dollar strength, and it's been the economic weakness of the UK that's been driving that double-digit inflation, and also the fact that UK growth has been among the lowest in the G10, and there's no change in sight. So we think this is an aggravating factor, but we don't think that political developments will drive the pound in any particular direction. And as you see, today, maybe the resolution of uncertainty is a slight positive, even though we don't think that will last.
Ibrahim, where are the points that you see in currency pairs that would suggest policy intervention of a dollar too strong? Give us an idea on euro as compared to dollar, or sterling compared to dollar, or even dollar compared to yen. Where is your target point where there would be policy intervention?
Well, we think that there are two types of policy interventions. So we think the most relevant element of the so-called reverse currency wars is that as exchange rates have been weakening while inflation has become a bigger concern, that's been pushing central banks to tighten policy or intend to tighten policy faster. And we've seen this across the G10. So that point of intervention is already with us. We've seen many central banks at least up the pace of rate hikes to 50 basis points, which is now the norm, at least for the second rate hike in G10. When it comes to actual FX intervention, the bar is much, much higher, and it's particularly high if these economies are part of the G20. So we still think the yen is the most plausible among the majors, but we think that's north of 140 in dollar yen, and it looks less and less likely that we will get there in short order. So for now, we think that points of intervention are far away in the major currencies, but we've seen a number of emerging market currencies, of course, being intervened in. So usually you would expect more FX intervention in those currencies, and we think that will find its continuation as we think more dollar strength is still in store.
If you are just tuning in, about 20 minutes ago, we heard from the Prime Minister Boris Johnson announcing his resignation. Many of you have been anticipating that moment in the last 24 hours, the pressure building on him, the momentum building much more so earlier this morning. What we don't know is the timetable for this leadership transition. The Prime Minister saying moments ago that we would get one perhaps next week. Ibrahim, looking at this FX market, something that both Tom and I, Lisa too, is unfortunately not with us today. We've been trying to work out whether central bank rate hikes are positive or negative for sterling or the euro. What we know, it's almost guaranteed in our future right now, is that the ECB will hike interest rates, that the Bank of England will likely hike interest rates. And Ibrahim, what I don't know is whether that will be supportive or have the opposite effect on the currency or not. What's your interpretation of that?
So as you say, it's in fact not at all straightforward. When you see central banks hike rates because it's in the context of a stronger economy, it's an unambiguous positive. But in places like the UK and the Eurozone, you're really trying to address multiple challenges, and you're picking the lesser of at least two evils in many cases. So in the case of the Eurozone, you have to hike rates while keeping fragmentation under control. In the case of the UK, you may be forced to hike rates faster, really to bring inflation under control, but growth is likely to slow even more. So in both of these cases, I think we will come to a point where the exchange rate is so weak that rate hikes will be stabilizing. But in the short term, we don't think rate hikes can do very much at all to bring the value of their currencies up.
What a problem they've got. Ibrahim, thank you. Ibrahim Ragbari of Citi. And TK, I think this is the biggest problem right now, that currency weakness seems to be getting more currency weakness for the UK, for Europe too.
I'm going to partition it out as Citigroup and others do as well. You've got G3, euro, yen, and dollar, and then you go to developed economies, what Dr. Rabari follows. But also off of that is something that we have not spoken of, and I think is off the radar, and that is EM dynamics. And they're exceptionally fragile. It was Sri Lanka most visible and such, but in India as well, efforts in the last couple of days. The EM dynamic now is something into July we're at risk of ignoring.
Let's get the response from Brussels. We can catch up with Maria Tadeo over in Europe. Maria, I want to come to you and get the European response to what took place about 25 minutes ago.
Well, it's very muted. We really haven't heard from any major leader react to this. When you look at the European institutions, they've said in the past hour, nothing in principle changes. We'll stick to our rules, which are we'll look at the details of the deal that we signed and we'll continue to defend those. So a lot of this, of course, is this idea the Europeans like to play up. This is another day in UK politics. It is very messy. They always say, and this reinforces the messages that Brexit unleashed forces that have made the UK very unstable, and therefore it makes a bilateral relationship between the EU and the UK unstable by nature. But they do watch and they clearly care about it. The other thing that they, I presume, will be paying attention to is the woman or man that replaces Boris Johnson. But again, this will reinforce their thinking that they should not be flexible when it comes to changing the deals or parts of it, because they believe, imagine just 2 weeks ago, Mr. Šefčovič, who negotiates on behalf of the EU, had agreed to reopen the Irish protocol. Who's he going to negotiate now with in the next 2 weeks? Who is that person that he needs to deal with in the UK? So again, it reinforces this idea from the Europeans that we sit tight and don't move.
I mean, Maria, with a trip from Bavaria to Madrid, across all of that is the chaos of European politics, the shock of Macron that Adam Posen mentioned earlier, some autocracies in Eastern Europe and such, and now this historic moment for the United Kingdom. How would you suggest Mr. Putin sees this through the Russian prism?
Yeah, and he'll see what looks like, in principle, a mess. And remember, this is very important to actually stress this point. Ukrainians love Boris Johnson. Alongside the Polish, he is definitely top one. They love him. They love the way he talks about Russia. They love the fact that he's so tough on Vladimir Putin. And if you ask the average Ukrainian, do you know who Boris Johnson is? They'll tell you, yes, he's the UK Prime Minister. I'm not sure if you ask about Mario Draghi, perhaps in Italy, or Olaf Scholz in Germany, that have the same kind of response. I think for the Russians, they would look at it as the political mess that comes sometimes with European politics. But the reality is, behind the scenes, nothing will change. The sanctions, they stay on. The policy is not changing, presumably. And of course, for the Russians, it's the weapons flow going into Ukraine, which for the time being, nothing is going to change on that front. So it is perhaps a political debate, but in reality, not a lot is going to change overnight.
Maria, thank you. As always, in Brussels, Maria Tadeo. That last point for Maria, Tom, I think it's lost on a lot of people just how well appreciated he is in that country, in Ukraine, by the Ukrainian leader Zelensky as well.
It's always as he's touched on the Churchillian spirit, or how at least he sees it. One of his heroes, Winston Churchill, and it's not that he mimicked it or mirrored it, but he touched upon it within all of his study of history as well. I think a lot of Americans don't appreciate this. We need to make this clear. There's some distinctions here with President Trump. This guy was a real student. He was, superb intellect.
We'll move away from the United Kingdom now, Tom, and back to the United States. In the next couple of hours, we'll be catching up with Heather Boucher of the Council of Economic Advisors, Brian Deese, too, of the National Economic Council, the director. All of that coming up, Tom, in the next couple of hours. And we need to talk about policy here at home in the United States and how they tackle problem number one. And problem number one is inflation.
Inflation.
Without a doubt.
And how it folds into all the rest of the story, but inflation up in front.
Tom, I said repeatedly at the start of the year that I thought the timetable might be on their side, that as this year progresses, that this inflation story may kind of whimper out a little bit. A lot of people are on the same page as that. Here we are, midpoint of the year. I can't give them that anymore, Tom. I don't know if the timetable.
Well, and this gets to the separation of core versus headline inflation. The American public doesn't care about core inflation.
You can't eat core, can you? You can't travel to work on core inflation. From Washington, D.C. this morning, good morning. With Tom Keene, I'm Jonathan Ferro, with futures up 0.4% on the S&P 500 and crude. Maybe this is a welcome one from this administration. Sub 100.99. This is Bloomberg Surveillance.
The Fed keeps going 75 basis points a clip for an indefinite period, we will have a recession soon.
The Fed may need to slow down its rate hikes sooner than later.
It's not yet time for the Fed to say that they've accomplished their mission.
What we want here is monetary and financial conditions to tighten.
We're not looking for an imminent recession. We are looking for a notable slowdown.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene today from Washington. We welcome all of you worldwide and across this nation. In this hour, we will speak to members of the White House staff. But in this hour also, we will digest a change in the United Kingdom. John, truly an historic day for your United Kingdom.
Just 30 minutes ago, the Prime Minister of the UK, Boris Johnson, standing outside number 10 Downing Street, approached the podium straight out the gate, announced his resignation. What we didn't hear, and that's important, we didn't hear the timetable for the leadership transition. The Prime Minister told us, Tom, we may get that next week.
It is a world in disarray. We make jokes about it, the drama of it all. What is the next process within the parliamentary system?
Ultimately, Tom, what's got to happen here is the Conservatives within themselves, MPs, have got to work out who they're going to put forward to the Conservative membership, the membership in the British public, to make a decision who's going to be the next leader. So you've got to go through point 1, then point 2, then once you get a vote from the Conservative membership on who that leader is, then we have a Prime Minister to lead that party with a majority in the House of Commons, and ultimately that's when the pressure will build to announce an election.
We're going to get to
There's a few steps before we get there, Tom.
We're going to get to a data check here and a good conversation with Patrick Armstrong. But first, John, the backdrop of this, as we will hear from the White House in this hour and also in our next hour, is inflation. It's nothing like what Boris Johnson sees in his United Kingdom.
Similar headline numbers, but ultimately the domestic pressure.
Why is it different
for this president? Why is it different for this president? He faces midterms at the end of the year. Midterms at the end of the year for his party, who are going to, at this point, Tom, if the numbers stay where they are, they're going to be in a little bit of trouble. How do they approach this issue, number one? And do they have to at least give up some of their foreign policy goals to achieve something domestically? Number one for me...
I don't understand how they achieve something domestically.
Number one for me is China right now. This is an administration that has come out and accused the Chinese Communist Party of genocide. This is pretty serious stuff. And at the same time, there's been reports on and off over the last several months that this president, this administration, is considering removing some of those Chinese tariffs. How do you make that palatable at home when you are accusing those very same people of genocide? And this was a report from Bloomberg earlier this week that potentially you remove some of the tariffs on goods. Some. And then you double down on the effort elsewhere. So we need to work out the nuances, but also we need to work out whether they're going to do anything. I want to say this, Tom. How many things have you heard in the newspaper, the Washington Post, the New York Times, here at Bloomberg, with our great reporting, of course, little things getting floated here and there, a rebate card, perhaps asking the Saudis to do something on output, removing Chinese tariffs, doing something on tuition, and all of the above. Just piece after piece. But how many things have you seen that have actually been executed?
No, these are what we call trial balloons.
But how many trial balloons have we had, Tom?
Trial balloons are going down in flames. They're bursting like fireworks on the 4th of July.
Is that what's flying above us, behind us, trial balloons, constantly?
Those are trial balloons tried by theory and practice. It's original right now, and that comes back to Jobs Day, which we will see tomorrow, claims coming up in this hour with Michael McKee, and that is the one trial balloon for every politician going back to Gladstone in the United Kingdom and Lincoln in the United States. It's about jobs, and it's a fully employed America.
Look at that number, 268 for tomorrow. 268 is the estimate. I have no idea if that's the number we get.
Non-farm payrolls.
Non-farm payrolls. Right. But Citi and others believe, with those kind of numbers in this labour market, for that reason, this Federal Reserve is going to stick with us. Stick with it for quite a while, because the numbers from the labour market
you're more up to speed on this
decent.
than I am. Hollenhorst at Citigroup led.
75.
I'm going. He's still on 75. Is that a front-loading 75 or just part of an organized path?
75, and perhaps you gradually come down to, say, 50, then 25. Right. But there are banks out there that still think they get Fed funds to 4. There are many banks out there that still believe that.
Let me give you the nuance on the data check. John will dive into some of the details here. And to me, it's further inversion today, a little bit of yen weakness as well. But for me, the quiet headline that John mentioned in the last hour is an equity market that is on bid. It's a quiet on bid. And I thought Anthony Dwyer was fascinating in the dark of a Washington morning, talking about you've got to find where you step into a summer rally.
We've had 3 days of gains. This would be day 4. We're up 0.4%. These are small moves in the context of what we have seen so far this year. There's a major hurdle. There's 2. They start next week. CPI July 13th, then on to earnings season. JP Morgan kicking things off unofficially. The earnings will be the difference, Tom, between what we get in the back half of this year, more losses still to come, or a resilient earnings story that generates some gains. And that's the difference, I think, on Wall Street at the moment, with JP Morgan bullish, Marko Kolanovic, and then you've got Mike Wilson at Morgan Stanley, much less so.
Helping us out this morning with Plurimi Wealth, Patrick Armstrong joins us, the Chief Investment Officer. Patrick, we have seen a political crisis this morning. Can you help me with how you adapt and adjust to the bet in stocks and bonds on the United Kingdom?
I think it's almost a non-event in the big picture because what's happening today in the United Kingdom, it's driven by global events. Domestic policy is almost impotent given the backdrop of what we're facing globally. I don't think there's any populist play that can get promoting a big regime change, basically. So we're going to get a new conservative leader who's probably a little bit more strategic, less tactical, but will focus on some of the longer term issues that need addressing. But I don't think anything changes wholesale other than we maybe get a little bit of a steadier and one who's a little less blundering. I think Boris Johnson would have been a very good prime minister in a lot of circumstances, but he's faced an incredibly challenging time as well.
Patrick, as we work our way through summer here in Washington, I want you to take me out to winter in Europe if you can. Can you give us an idea of what we should be anticipating with this economy this coming winter?
It's going to come down to Russian gas supplies, and if there are any, it's a very steep manufacturing recession in Germany if Russian gas doesn't get into Europe, and if there's prices like the electricity forwards are in Europe. So you're in recession right now in Europe, and I don't think that changes anytime soon. Winter is when things are going to be worst. It's very difficult to imagine a scenario where you do get electricity back on very quickly.
This is so important, Patrick. I need to interrupt, but John, I want to bring you into this as well. How do you have a recession policy in any area, let's pick on Lagarde's Europe, if you're enjoying a fragmentation study? It's nonsensical.
You've touched on the heart of the problem. Patrick, if we're in recession in Europe right now, and it could get worse later this year, how is the ECB going to hike interest rates into that story?
I think they have to get to zero as quickly as they can, and then they're sitting on their hands. I don't think going back to negative interest rates really will get the European economy out of the recession that it'll be in anyway, but just getting towards zero. And then that hiking cycle Lagarde alluded to in her last meetings, it's not going to happen if I'm right, and we're in a big manufacturing recession, because that's going to lead to job losses as well out of Germany.
To the present gloom, crisis, and cacophony, Patrick Armstrong, can you acquire shares today? Can you be optimistic about buying quality blue chip stocks?
Well, actually, I think you can be, because my view is that the Fed blinks. The U.S. might not be in a recession and maybe on the cusp of a recession. As the Fed sees its interest rate hikes pushing the U.S. into recession, I don't think Powell has any intention to create a big jump in job losses that would basically get rid of the inflation he's worried about. I think as long as inflation's plateauing, which I think it is, you see commodity prices having rolled over already, I do think the Fed can ease off on things and not get anywhere near the levels that their dots are at, but still have some credibility because inflation's on a downward path. Job growth is slowing. Demand-led inflation is slowing, but inflation persisting significantly above the Fed targets is where I think we're going to get. So I think that's a bullish thing for markets. And I actually think China is going to have a really strong second half. At some point, they'll declare victory on COVID.
Yeah.
The zero COVID policies, they'll just have to say we've won. We don't need these anymore. And that's massive incremental demand. And that's something that people aren't ready for right now. So those are both positives. You combine that with very negative investor sentiment, you can see a sustainable rally from those three things.
Patrick, I want to pick up on two of them. One's China. I've got no idea what the Chinese Communist Party are going to do. And of course, you've got to put money to work. That would be my point on that. On the Federal Reserve, you said the Fed will blink. Can you give me a deeper understanding on what will the trigger be? What will the trigger be for this Fed that you think will blink?
I think it'll be an acknowledgement of the economic realities that the country's facing. And as job growth slows, you've got unemployment at 3.6%. You've got wage growth at 5.2%. It's hard to imagine a significant recession because 70% of the U.S. economy is consumption, and Americans are fully employed. They're getting pay rises. If that does start to weaken, I think the Fed, as long as inflation has plateaued and comes down on a couple of months in a row, still incredibly elevated levels, I do think then they start to slow, saying our policies are already starting to take effect. And they've got to think in a global context as well, that if Europe just gets to zero and doesn't hike, the relative hiking they're doing is still creating a very strong dollar, which is going to reduce inflation for them as well.
Hey, Patrick, good to catch up. Patrick Armstrong of Plurimi Wealth there. Patrick, thank you. TK, you've mentioned this repeatedly. He made 3 points there about why it's constructive. Let's pick up on point 3, China. How many times have you brought that up now? China.
I believe in this. I believe in a Pacific Rim recovery. Jay Polanski, is it, who appears on your 9 o'clock property
Does he
often.
not appear with you?
He doesn't appear with me because he loves to appear with you. I don't know what that's about, but it's great. For radio, for television worldwide, here at the Hay Adams Hotel. It's a summer book reading, folks. Summer book reading for you on John Hay in his tenure with Theodore Roosevelt.
Is that your book of the year?
That's my book of the summer.
Coming up, Heather Boucher of the Council of Economic Advisors and Brian Deese of the National Economic Council in the next couple of hours on Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It's official, Boris Johnson has now resigned, but the British Prime Minister isn't going away yet. In a speech outside number 10 Downing Street, Johnson said he would stay on as a caretaker leader until a new Prime Minister is in place. A timetable for the process will be announced next week. Johnson said he spent the last few days arguing unsuccessfully that it would be wrong to have a change of government. FBI Director Christopher Wray is escalating a dispute between the US and China over hacking. Wray warned Western companies that China aims to ransack their intellectual property so it can eventually dominate key industries. He told an event in London that Chinese spies are snooping on everything from Fortune 100 companies to startups. A forecast indicates that last month, U.S. employers added the fewest jobs in more than a year, but economists say the slowdown isn't concerning, at least not yet. The jobs report comes out Friday. It's expected to show the unemployment rate remaining at a historically low level and another month of solid wage growth. The U.S. and its allies are exploring ways to limit Russian oil revenues without hurting their own economies. Bloomberg's learned they've discussed trying to cap the price between $40 to $60 a barrel. They would do that by banning insurance and transportation services needed to ship Russian oil, unless it is purchased below an agreed price. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This prime minister who thinks he's a president has caused untold damage. The Brexit situation by doing brinksmanship with the EU over Northern Ireland was huge. It undermines trust. It undermines certainty for investment. It shows how damaging Brexit is.
That was Adam Posen, the Peace Institute president, just a moment ago. An hour ago, we heard from the British Prime Minister, Boris Johnson. Prime Minister no more. In our future, a new Prime Minister stepping down. And Tom, what we don't know, and I think it's worth emphasising, we don't know the timeline for this leadership handover, if you want to call it that. The Prime Minister suggested in the last 45 minutes we'll find out next week.
Well, he said we'll find out next week. You got to get to the weekend. And, you know, they don't do Sunday talk shows, I don't know, in London. But I don't understand how do you get to the next week. But how do you get to, okay, what are they going to talk about there? How do you get to next week? I don't see it.
We've got to game out who the next Prime Minister is. And from there, Tom, game out when, if we get an election this year or perhaps next year, Tom. No idea.
I'd make jokes about it, but this is a really serious moment for this nation.
Serious moment for this nation. I agree with you. But I've made this point once this morning, and I'll make it again. For the rest of the world, do they bat an eyelid? Seriously?
No, it's theatre.
It's theatre.
We talked about it.
Precisely.
Theater.
Because when it comes to the hierarchy of issues right now, Tom, this doesn't feature. Well, this doesn't feature.
We're going to dive into this, and we do this with two guests from the White House coming up here in a bit. Anne-Marie Horton is with us here in Washington. We greet all of you. For those of you on radio, one of the truly great vistas of Washington, the Hay Adams Hotel overlooking Lafayette Park, and then, of course, the White House and onto the Washington Monument, the Jefferson Memorial. She doesn't have all that in London. Lizzie Burden is solely and singularly at a somber 10 Downing Street. Lizzie, what is next for Prime Minister Johnson?
Well, he says that he's going to stay on as a caretaker. As you say, that there'll be a leadership contest later in the year, and the timetable is going to be set out for that next week. But you were asking whether Boris Johnson can even survive as a caretaker. Let me read you a tweet from Dominic Cummings, his former aide. He says, we're in for a nightmare if he's allowed to squat in number 10. He said the speech blames everyone else, thinks he's the real victim, and sets up a betrayal story for future Telegraph columns, his former job. So the pressure really will be on Boris Johnson. There are many people who would have preferred his deputy PM, Dominic Raab, to have taken over as a caretaker.
Right. How will the Labour Party respond? What does Sir Keir and the others do of the Labour Party to adapt and adjust to what we saw in the last hour?
They could call a vote of no confidence in Parliament, but of course it would take the Conservatives to get on board with it, to have the numbers to oust Johnson that way. The Conservative MPs will be hoping that enough of them can get behind a new leader. But even if they pick a new leader by October, that person will only have 14 months before a general election to get a new agenda together. So they're going to have a difficult time as well.
Lizzie, wonderful to catch up with you outside number 10 Downing Street. Lizzie Bird and Anne-Marie, how many times have you seen this movie now in the United Kingdom? This is the sequel.
This is the sequel. This was, I mean, when I moved to the UK, the big thing was the Scottish referendum. Then, of course, it was Cameron's referendum, Brexit, and now this. And even the contest in 2016 for who was going to be the Prime Minister was really combative. So, as you say, it's a different situation. The Conservatives will have the party. Not much exactly changes, but who's going to lead that? It's anyone's guess. It is a little bit of a show.
There are a few more votes to come. There's going to be a leadership contest, then there'll be potentially an election. I have no idea when. Let's talk about what we do know. There will be an election later this year, a series of elections right here in this country. What does this White House need to do? What can they do? Perhaps that's the more important question ahead of those midterms.
They need to bring inflation down. And it's difficult, right? Because they're putting all this pressure on the Fed to do it. At the same time, right now what they do have in their favor, and they like to tout, is strong growth,
right,
low unemployment, and with the Fed hiking rates, you already see the Fed projections, all of that potentially could start to diminish, and inflation can still be high.
Right.
So gasoline and food prices.
A delicate question, particularly with two guests coming up from the White House. Describe in the White House the advisory around the president and then the experts that he has on economics or energy or on other matters of public policy. Is it such chaos that they can't be heard?
So what you have is a very tight-knit group close to the president, obviously his chief of staff, Ron Klain. Then you have Brian Deese, who you'll be catching up with. Looking forward to that conversation. And then you have the experts like Treasury Secretary Janet Yellen, which we've written, Saleha Mohsin, a deep dive, how she's been really almost ostracized and only comes in when she's invited. Mm-hmm. And is that really always the case?
Can we sit on that for a moment? You have got one of the most remarkable labour market economists on the planet who has been invited to take a job that we understand from a lot of reporting that she was resisting. Mm-hmm. She takes that position and is not part of the conversation in a big way in the White House?
That is the reporting, yes.
What's the why on that?
She doesn't have like the political acumen that you would normally get from a Treasury Secretary. She's not going to walk out of the department and into the West Wing and demand a meeting with the president. She's going to wait until she's asked to give her opinion, and they don't always ask for her opinion.
Who did they think they were hiring?
Well, that's exactly the greatest question, because you can see in her public display, she's still very much a Fed chair almost, right? She's not a political creature of Washington. She's an intellectual and she's a Fed chair.
What is the power of the progressives right now? Certainly they had a very strong 100 days with the president, even taking it further than that. Is there a nuance there and recalibration? The liberals, as they speak to their president, what's the new calibration?
Depends what the issues are. So when you look at things like energy, the progressives are not winning. This administration and Democrats need more fossil fuels on the market.
Yeah.
They need to bring gasoline prices down because the most vulnerable in society are suffering. But then you look at an issue like Roe v. Wade. The progressives say this White House is not doing enough. Yes, at NATO, the president said he would back editing the filibuster for this rule, but you have liberals and even some Democrats coming out saying you could do more, allow abortions on federal lands, pack the courts. They will not do that.
Anne-Marie Horton, AMH. Thank you for this administration, Tom. Wow, is there a lot of work to do? What can they do? I think that's the more important question when it comes to inflation.
What can they do?
What can they do?
They can look at the calendar. That's the number one thing they can do.
Do you think that's still on their side?
The calendar is moving very fast for President Biden.
Coming up, Heather Boucher of the Council of Economic Advisors and Brian Deese of the National Economic Council, the director, will be joining us in the next hour. We'll catch up with both of them. With Tom Keene, I'm Jonathan Ferro. Bramo enjoying her vacation, I'm told. TK, she'll be back next week. Future's positive. And this is Bloomberg. Live from Washington, D.C. this morning. Good morning to you all. Together with Tom Keene, I'm Jonathan Ferro. Moments away from economic data in the United States of America. Jobless claims just around the corner. Then on to tomorrow with payrolls Friday. Teed up looking for 260-something thousand jobs in America for the month of June. Mike McKee standing by with some breaking data. Let's get straight to him. Morning, Mike.
Good morning, John. Well, first breaking data is trade. The trade balance comes in May at negative $85 billion, 85.5. That is a little worse than the preliminary estimate of 84.7. So that is a little bit worse in terms of GDP. Now, the jobless claims numbers, 235,000 last week. And that's just a touch up from the 231 initially reported the week before. But on the other hand, it is continuing the trend higher. And that is going to be a bit of a worry for the administration and for the Federal Reserve because the jobless claims numbers are sort of the canary in the coal mine. We don't see a recession unless jobless claims rise significantly. And so they are not rising significantly, but they are rising, and that's been a trend for a couple of months now.
And Mike, typically when they start to do that and do that excessively, it's too late. It's too late and the canary is long gone. So can you tell me what this Fed will actually be responding to?
Well, they're just going to put it all together, John. It's not going to be any one indicator. Of course, we get jobs tomorrow, and we'll see where we are with participation and unemployment. And then we get the CPI the following week. They don't follow the CPI for their mandate, but they will take a lot of information about where inflation is going. They've got to figure it all out because, as you say, once the data starts showing we have a problem, it's too late. So they've got to see what it's trying to tell them about what's going on. The hard thing about jobless claims in this situation is that they have been so low for so long in a way that we had not seen before, except for the spike during the pandemic, that it isn't clear exactly what the signal is. What would be a normal level for this time?
Michael McKee, spanning here in Washington from the Economic Policy Institute to say the Brookings Institution or over to something like Heritage, more conservative. Can those three think tanks say it's a fully employed America?
I think there's no question it's a fully employed America. We are still looking for 11 million jobs, according to the JOLTS report yesterday. And the ISM services number was interesting because it was in negative territory, 47, which should suggest contraction. But the problem, according to the businesses responding to that, was that they can't find the workers. It's not that they don't want to add, it's that there aren't people to work at this point. Now, we don't really know where the natural rate of unemployment is. The Fed thinks it's in the low fours, and so they're sort of aiming for that as perhaps where they end up as they continue tightening. But we'll have to wait and see when when unemployment starts to go up to see if they change their minds or put any more precise prediction on it.
Mike McKee, looking forward to your coverage of payrolls Friday tomorrow morning, 8:30 Eastern time. Mike McKee there. Do you know that clashes with the tennis, I think? Doesn't Rafa play at 8:30 Eastern?
Who?
You don't know who Rafa is?
Rafa?
Okay, futures positive on the S&P. I'm going to pretend that didn't happen. On the S&P 500, we are positive. 3 days of gains on the S&P. He knows who Rafa is. Off the back of today, we could have day 4. We are positive 1/3% on the S&P 500. Yields higher by about 3 basis points. This is the bounce back we've got in treasuries.
Right.
Approaching 3%, Tom. That curve still inverted. Twos versus 10's negative 4 basis points or so.
Not much off claims, but there's a trend as well. And again, oil 99.59, I think, is front and center as we speak to the White House here in a moment. We welcome all of you in Washington today. John Ferro and Tom Keene. Lisa Abramowicz is off. And we drive forward the conversation now on a fully employed America and the mystery of these times in labor with Stephanie Aronson, head of economics at Brookings. And of course, a Brookings institution that stopped the world of think tanks a number of years ago when down one hallway you had a shingle that said Bernanke and a shingle that said Yellen as well. What was it like for you to wander in on a daily basis and have a cup of coffee with the Bernanke-Yellen axis?
It's funny because I'd had the opportunity to work with both of them when I worked at the Federal Reserve, and then to see them in this context was really a treat. I once was at a talk where Bernanke once said, I announced him, introduced him at the conference, and then he said, Stephanie used to work for me, and now I work for Stephanie. So
the acclaim of Chair Yellen, now Secretary Yellen, is this word slack, the measurement of the inefficiencies within the American economy. Many in society, including those that support President Biden, would say there is still slack in our labor economy. Is there?
I think by some measures there is some slack. In particular, the labor force participation rate is still a bit low relative to where we would think, even given the fact that the trend in participation is going down. But unfortunately now the Fed also has to worry about inflation. And so they can't, make the labor market perfect, I think, at this point.
If we can go back a couple of years, we were talking about getting back to where we were, getting that employment to population ratio back to where we were. Clearly, inflation has interrupted that ultimate objective that so many of these people had. But what has happened, do you think? There was a while, and I was part of the conversation, you had to ask the question, is it the benefits, the excess benefits we're sending to people that are keeping them out of the labour force? Doesn't seem like it was that. We asked that question a million times. What do you think it is? Mike McKee there just talking about the ISM services yesterday, saying that we don't have a demand problem. We still have a supply problem. Where are they?
I think one of the things is that when the pandemic hit, a lot of people were forced to leave the labor force. And then they made decisions that are keeping them out now. So people can decide to stay home and take care of their children or their elderly parents. They go back to school. And I like to say that these decisions are sticky. And so, even though maybe there are more opportunities in the labor force now, people have just changed their behavior in a way that is causing them not to look for employment now. It may be over time if the, employment continues to expand, unemployment rate stays low, some of these people will be brought back into the labor force, but that will just take time.
How high does the price need to go to change that behavior? I'm not talking about inflation, I'm talking about wages. How high does that need to go to ultimately get that supply side response that we just haven't seen in a profound way?
Yeah, I think no one knows the number, but it's clear that workers in the United States are underpaid. They hadn't had wage gains in real terms for decades. And we're making up for some lost time now, but it's clear we haven't made up enough.
I got 8 ways to go here. I'm going to go to the laureate Paul Romer at NYU and the idea of technology and the impact of compensation, where executives now are salary and bonus, and you'd say over 15 years, they know they don't get that bonus if labor gets that pay raise. Are we at as Bullard would say, are we at a regime change now in labor and finally lower deciles can begin to catch up?
That's certainly what it has seemed like in the wake of the pandemic. I think one of the big questions is whether that will persist as the economy slows.
Well, but the basic observation, and John and I get tons of mail on this all the time. Geez, we can't hire, name the job, shortstops for the Washington Nationals, whatever. If that's the case, just pay them more. If you pay them more, do they show up?
Workers show up if you pay them more. And I agree. I think you have identified a big puzzle. It's often in surveys of businesses, they say they can't hire workers. And then when the question comes to have you raised wages, they say no. What do they expect?
It's, to me, generationally bizarre.
With this in mind, what do you make of what the Federal Reserve is trying to achieve?
I think they're trying to achieve something very difficult. I think it's not impossible. Clearly they need to slow the economy in order to bring down inflation. Part of the problem is that a lot of the, causes of inflation right now are on the supply side. And the Fed's tools are not really good for lowering oil prices or food prices. All they can do is try to slow demand. So I think that it'll be difficult for them to do, but it's certainly not impossible.
I'm just bringing up their forecast for unemployment on the Bloomberg terminal, 3.7% for 22. For 23, it ticks up to 3.9, then 4.1. We've asked 1 million guests this question. Is that aspirational, overly optimistic? Some people might say fanciful. What do you call it?
I think that they would have to be very lucky to achieve that. The truth is, at times when the Fed has really wanted to bring down inflation, they've ended up causing a recession. And I don't expect, if we do, go that route, I don't expect it to be very deep. We're not looking at, the Volcker recession of the early 1980s or the Great Recession. Yeah. But I think it'll be hard for them to substantially slow the economy. Typically when the unemployment rate rises like that,
right.
You're in a recession.
We want to get a quote on the 10-year to you to 4 decimal places, but we won't do that. Instead, we'll say, does someone fancy like you look at jobless claims?
I think the jobless claims are not that helpful, I think. I mean, part of it is that a lot of the slowing early on comes from firms stopping to hire. So the first thing we're going to see if we're really, the labor market cools is firms are going to reduce their hiring.
Job openings.
And job openings should go down, and we know the Fed is counting on that. And then eventually firms do start to lay off workers, and the claims numbers will go up. We've seen a little bit of an increase, but I don't put too much weight on that.
235. I mean, bit of perspective here. 235 historically, Tom.
Well,
not even population adjusted. I mean,
you adjust for population.
Then you've got a very different number.
What's your favorite chart right now? What's the chart that tells the greatest story right now of the American labor economy?
I mean, actually, I have to side with Yellen here and say I really like the quits, because I think the quits rate says something about how confident workers are feeling in the economy. And the quits rate is high, and in May, the latest data we have, it kind of moved sideways.
So the confidence is still there.
So the confidence right now is still there.
They feel good about quitting their job, but ultimately they're not happy with the economy. Can you reconcile?
No, I can't. I go to a decile analysis. We don't have
do.
time for this, but I go to a decile analysis.
We should extend the show.
We should extend the show. Each decile is different.
Stephanie Harrison. Stephanie, thank you.
My pleasure.
Thank you very much. Coming up very shortly, we'll catch up with Heather Boushey, Tom. And then on to Brian Deese in the next hour.
These are going to be important conversations. It's a White House with tension right now. There's no question about it.
Without a doubt about it. Coming up very shortly, Heather Boushey and Brian Deese from this administration from Washington, D.C. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boris Johnson bowed to the inevitable today. He resigned as British Prime Minister after a succession of scandals and the rebellion of his own cabinet. Johnson plans to stay on in a caretaker role until his Conservative Party picks a new leader. The timetable for that will come out next week. In China, the Ministry of Finance is considering whether to allow an unprecedented acceleration of infrastructure funding. It would be aimed at shoring up China's beleaguered economy. Bloomberg's learned that local governments would be allowed to sell $220 billion of special bonds in the second half of the year. The bonds would be brought forward from next year's quota. A key commodities gauge has plummeted since reaching an all-time high a month ago. The Bloomberg Commodity Spot Index has lost more than 20% after setting the mark in June. Prices for everything from gasoline to wheat are slumping on concerns that a stagnating economy will hurt demand. And is the first indicator of just how much cash is flowing to the major oil companies due to the rising cost of gasoline. Shell says the soaring margins from fuel production may have added more than $1 billion to the earnings of its refining business last quarter. Oil prices have jumped 30% this year. And Samsung Electronics reported a better-than-expected 21% jump in revenue that helped drive a rally in Asian stocks today. Samsung is South Korea's largest company, and its results are seen as a bellwether for electronics demand. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We simply have a very strong unemployment situation, a very strong labor market that's continuing to fuel consumer spending, keeping the economy moving forward. Yes, real constraints out there on the supply side, obviously elevated inflation, but it is a more nuanced picture.
Jared Bernstein there, the White House Council of Economic Advisors, weighing in on the situation in the United States. If you're wondering what you miss in commercial breaks sometimes, Tom making academia jokes, is that right? Academic jokes? Is that your sense of humor?
We were talking about an academic institution far south of Manhattan. You know, I never get below 59th Street.
I'm aware. We're all
I haven't
aware.
been down there. It's like
are you trying to cause trouble with our next guest?
It's where the more leftist universities are.
Is that right? I'm going to get a quick check of the market, and then you can dig yourself out of this hole.
Looking forward to this.
Okay. Equity futures look like this on the S&P 500. Bear in mind we've had 3 days of gains on the S&P. Can we make it for Tom? We're up 0.4% as we count you down to the market open. About 45 minutes away.
We welcome all of you on radio and television worldwide and across this nation with 2 conversations from the White House as John Ferro and I visit Washington. Heather Boucher with us right now. To say she's a member of the Council of Economic Advisors doesn't describe how important her position is. Her book, Unbound, stopped economic traffic a number of years ago and looking at the inequalities of the nation. And she has an economic pedigree very different from most, including working at the University of Heilbronner and Bernstein, the new school of social research in Washington.
Did he dig himself out of the hole?
How are you treated by the fancy academics from fancy schools that wouldn't know the new school of social research if it hit them over the head?
Well, you know, in econ circles, I think what matters is, how will we talk about the economy? And I think I have not experienced discrimination based on my pedigree.
We're not going to talk about jobless claims. That's inappropriate right now, given the policies of the White House. But we can talk about the state of inequality in this nation. When you speak to the president, when you advise others in the White House, what is the character of our labor inequality right now?
Well, one of the things that we've seen since the president took office is in large part due to policies like the American Rescue Plan, like making sure that we wrapped our hands around the pandemic and got the job market back in motion. We've actually seen that this has been good for addressing inequality over the past year and a half. What remains to be seen is whether or not we can continue those trends. But certainly the president was focused first and foremost on getting people back to work. And we know that for the vast majority of Americans, the vast majority of their income comes from their job. So if people have jobs, and especially jobs in an economy where wages are rising, that is core.
John, this is so important. We forget. We're so jaded in our Bloomberg world. If you're popping 200,000 or 300,000 jobs a month, non-farm payrolls, for any president, that's a success.
I would say the difference between Wall Street and Main Street, and there are many, let's be clear about that. On Wall Street, there's an addiction to trading off headline numbers and not talking about the disparity beneath those headline numbers. We hear phrases like the consumer's strong, the labor market is tight. Do you characterize those two things quite the same way?
Well, I think what we are looking at, and certainly what the Council of Economic Advisors is looking at more generally, is how many people have jobs? Where are those jobs? What does that look like for people? What is family economic security? Because that's the foundation of spending across our economy. Consumer spending is 70% of GDP. So making sure that we are attending to that basic fundamental fact. The president has said it so many times now that his goal is to build an economy from the bottom up and middle out. And that's a promise that he has made to the American people and one that he is working each and every day to keep.
This is a difficult question to answer, granted, but I imagine you've done some research on this. When you look at incomes right now, particularly for lower income Americans, what proportion of that wallet are they now spending on energy? Just how bad is it out there for them?
Certainly. The high prices in energy and also food affect lower income families more so than higher income families because it's a big portion of their income, and it's also money that they have to spend. If you have to put gas in your car in order to get to your job, that's not something that you have a choice over. So this is one of the reasons why the president has prioritized doing everything he can to get inflation down and to doing everything he can to get gas prices down, noting that we are here because we've been recovering from a global pandemic that has led to supply chain challenges around the world. This inflation is global. It's not just in the United States. And of course, you add to that the war in the Ukraine that Putin is waging. All of these things are making it harder for especially moderate and low-income Americans.
What they can do is a question that we've been asking all morning. What can you do? What can you do to actually offset any of this pain for Americans right now? We've talked about the trial balloons that are floating outside the White House on almost a weekly basis right now. We've heard about a fuel rebate. We've heard about all kinds of things, removal of Chinese tariffs. Proposals that aren't being executed on, at least I haven't seen them. What can you do, and what do you expect to happen?
Well, so the president's been very clear in focusing on what he has control over. So one of the things that he did early on that I think has been incredibly important has been releasing oil from the Strategic Petroleum Reserve. So working with our allies around the world, making sure that oil was available in this time of need when we do have these supply side shortages. The president has also, over the past couple of weeks, been working with refiners. We know that one of the challenges is that many refineries, too many, shut down over the pandemic. Capacity has been constrained. The president is working and has asked his energy secretary to work with refiners to see what they can do to get things flowing again, but also noting that because of high oil prices, because of high gas prices, these folks are making a lot of money, so they have resources to make those investments.
Down the hall from your office in the White House is a political raging battle over, say, how to take Pennsylvania at the midterms, how to take Pennsylvania in 2024. All of that is about the rage of the middle class, either Republican or Democrat, over the inequalities, which you've written about in your acclaimed book, Unbound. How do we address in this nation the idea that technology benefits the haves? Technology maybe benefits all of society, but technology burdens and lowers the outcome, the standard of living for the great middle class. How do we make technology a friend of people that want to vote Democrat?
Well, a number of the things that the president has focused on are about that. And maybe your viewers don't quite see the connection. So let me outline a few of them. So one of them is early on, the president put out an all-of-government effort around market structure and competition. Let's make sure that markets are fair and that they deliver for the American people, including...
But I don't mean to interrupt, but this is important. There's a huge body of people of all political persuasions who feel it's rigged. It's rigged here at Lafayette Square. It's rigged in the inner Northwest District of Washington as well. How do we regain the trust of the middle class that institutions can lead to a better life?
You do it by delivering. So you think of some of the things that the president's delivered on just in recent months. Things like making sure that prices on ocean shipping are fair. And so many of the things that we buy come on a ship that comes from overseas, but that process has been circumscribed by a small number of firms. So the president is using his tools to say, let's make sure that those prices that people are paying are fair.
Is he blocked by Republicans?
Well, so here's the thing. The executive branch does have a lot of power when it comes to enforcing antitrust laws. The president has made clear that price fairness is a #1 goal, and that feeds through the whole economy. And he's also prioritized making sure that if you are a worker in a market where there are few employers for your services, that those markets can be more fair, more open. And I think that's one of the ways that you can see the role of technology in the kinds of algorithms that affect who's hired, who's fired, what pay is. These are issues that the president is brought to the fore. But the other thing that he's prioritized day in and day out is allowing workers to join unions. That's one of the ways that we address inequality. It's one of the ways that we think about how the economy can deliver for working people and how it can be fair and build that trust through democratic institutions on the ground in workplaces all across the United States.
Keep hearing that word fair. And you and I have had this conversation before. It sometimes makes it sound like something nefarious is happening in certain places. The president over the weekend said this: "My message to the companies running gas stations and setting prices at the pump is simple. This is a time of war and global peril. Bring down the price you are charging at the pump to reflect the cost you're paying for the product, and do it now." Jeff Bezos came out and tweeted the following. I'm sure you read it. "Inflation is far too important a problem for the White House to keep making statements like this. It's either straight-ahead misdirection or a deep misunderstanding of basic market dynamics. I'm not going to accuse you of the latter. I want to talk about the former. Where's that messaging coming from?"
The president has made clear that his number one goal is delivering for the American people. We are in a time of crisis. We are in a time of war where the president and our allies, we are supporting the Ukrainian people. Congress is engaged in this effort, both sides of the aisle, to say this is an important priority. And one of the consequences is this high price of oil because of global trends.
You didn't answer his important question. Everyone, Heather, everyone in the nation wants to know the answer to the question Mr. Ferro just asked you, which is who is advising the president on shockingly naive price theory over a gallon of gas?
So the president is not shockingly naive, and we are in this moment of global crisis in terms of energy, and he is using the tools at his disposal to make sure that the prices that people pay at the pump are fair. So what we know in oil prices is that the prices can rise very quickly. It can take a long time for those prices to recalibrate and to come back down. And he's saying, do that faster. You have the capacity to do so. You're making profits. But the important thing is that he's using the tools at his disposal, given this very challenging situation.
Is this central planning now? Is that what this has come to?
How is that central planning?
Are we going to sit here and decide what's fair, what's not fair, and then go on Twitter and say this is unfair, bring your prices down? But is markets or is it not markets? Is it capitalism or is it central planning? Where's this White House going?
One of the things that the president has prioritized is understanding the way that concentration across markets has affected the American people and is affecting markets. We know when there are very few players, this is Econ 101. You know when there's a monopoly that there is more price setting power. And that's one of the things that we know about what's happening.
Thank you.
Yeah.
Heather Boucher on Eco 101. Heather, fantastic to catch up with you, as always. Brian Deese coming up very shortly in the next hour from Washington. This is Bloomberg.